So today we are going through NSE share trading. And for those who have been following up, I think this is the 14th session we have been having on NSE. And today we want to see how to build wealth on NSE using DCA. DCA is dollar cost averaging, where you try and push your average cost as much as you can. You reduce them, so that when the share prices improve in maybe in the next few months, you start seeing some profitability in your portfolio. Then dividend stocks and how they work with DCA and also smart buying strategies. For us, we usually buy from the lowest seller. Today, let's see another way now you can utilize to buy at cheap prices at NSE. Again, my name's Peter Chege. That's my WhatsApp number. And this session is recorded. I'll be sharing the recordings. And thank you so much for coming today. And we'll be having these trainings again now every Wednesday and Friday. Wednesday is NSE training. Fridays will be international market using both AIB and also other brokers who offer international markets, so that you also have different options to choose from in terms of trading. Then the rest confirm you can hear me. Benson, you can say I'm not audible. Can you hear? Just confirm. Benson, am I audible? No. Benson, just confirm. In terms of downloading done here, I'll share the link where I will upload on our YouTube channel, then I'll share the link. I'll share the link at the end of this training where you can find the video. Okay, I think we can continue. So again, that's my WhatsApp number in case you want to reach out. So as I was saying, Wednesdays will be NSE share trading. So that you take advantage of the prices when they go down, and when they go up, you can take some profit. For those who want to gain through capital gains, I'll do a quick introduction to shares. You see how you can make money. For those who want to hold long term, then we can work with you through this journey and prepare a good portfolio that can serve you maybe in your retirement, or even you pass over to your beneficiaries. Then weekends, I also plan to have trainings on boards, both corporate and fixed income. That is government board, treasury boards and corporate boards. Treasury, they are government boards. Corporate is company boards like the one we had earlier, EABL board, and Safaricom board, the medium notes. And I believe more will be borrowing from the public in near future. So those ones we might be doing on weekends, and I'll be sharing all the links from the social media accounts where you have found this training from. And if you have any question, remember to put on the chat. If you have any question, just put on the chat, and I would request we roll our answer for those who are raising. If you have any question, just put on the chat. I will go through them at the end. So let's quickly dive in. For those who are new in share trading, I believe most of us will be new. There are those who have been trading, and they know what they have been buying. So let's first what are shares and how they help you. Remember, you're putting your money into investment. You are buying a shareholding company. Then when you put that money, you need to get some returns. Otherwise, it would have been better if you went into other saving products. So when you understand what you get from shares, it's easier for you to know where you're putting the money. So what are shares? Shares represent an ownership of a company. So when you buy shares, you are becoming a shareholder of that company. Like let's say you buy shares from Safaricom. You become a part owner of Safaricom. But remember, there are two types of ownership. There is the majority ownership. Those are the people who have majority of the shares. and there is the minority. So when you buy in small lots, you get into the category of minority shareholders. If you buy an accumulated, maybe surpass in millions, at one point you may get into the top shareholders. That information in terms of shareholding you can always get from company website, especially from their prospectors who are the majority shareholders. So when you buy shares, you're actually becoming a part of that company. So basically, as you see next, how shares are created. When you buy shares, there are two types. When the company is first listing or giving the first shares, it can be done through IPO or private placement. So IPO is where the company announces to the public, we want to sell part of our shareholding to you as a public. Then you give us money. Maybe we do some innovations or projects or even debt payment. So you become part of that company. You have given money to them. You want to get out. Maybe at one point, that's where now secondary market comes in, where you sell to another person who want to become now part of the same company. But remember, the new person who is buying is not giving money to the company. They're giving to you as a shareholder, then you give them the shares. In terms of private placement is where now the shares are not floated at NSE. You go to the company, you buy directly from them, you become a shareholder. Then when they list, most of them they do through listing by introduction. They just come to NSE. We just one day they float the shares that are publicly tradable. The ones they are listing, they are listed at NSE. Then investors who want to become part of the shareholders, they can buy. The ones who are already shareholders sell to them. So it gives a way for other investors who already own the shares to get out, like Family Bank, what they are doing. They'll be listing through introduction. The existing shareholders will float shares in the market. Then you as the new shareholder, if you want to buy, you can buy from them. There is this becoming shareholders immediately the transaction happens at NSE. So your returns comes either from, there are only two ways you can make money in NSE as a shareholder, either dividends, we'll see what dividends are, or price appreciation, which is capital gains. So those are the major ways. Well, there are other ways, like you could use SLB, where you lend your shares to somebody else, then they pay you interest for the duration they borrow the shares. In NSE, these have not picked up because usually they have not allowed short selling, where you can sell the shares you don't have. Then that would allow now that person who has sold what they don't have to borrow from the market for settlement. Then later they can refund back the shares. But until that is implemented, the only way you can gain with SLB is either you are taking loan, but you don't have shares. So you can borrow shares, use them as collateral, take the loan. Once you clear the loan, shares are released back to you, then you return from the person who has lent to you. And also, I think even some aspect of derivatives, but these are new products which are coming in the market. That's why SLB have not picked up. The other way is where now you can use your own shares as collateral for loan with banks. But remember, there is interest you are paying in the bank. You need to take care of that. Instead of you giving a title or your logbook for your vehicle, if you have shares, you can use them as collateral. So they are blocked at CDSE until you clear loan. Once you clear the loan, then they are released. Now you can sell. Remember, nothing changes. Your shareholding still remains. Your shares are returned back at that day's valuation. So you'll be able to see whether you are still in profit or loss. If you're in profit, you can still sell. So those are major ways you can use shares to gain. Dividends, price appreciation, SLB, security lending and borrowing, and where you can use shares as collateral for loan. Remember, shares, you can always pass them to beneficiaries. So you can always, when you're drafting your will, you can always share with your children. They continue enjoying the same benefits. dividends, they are the ones to receive. If they want to sell, they can sell, but we always advise it's easier if you onboard your children early, they understand the market, so that when you pass to them, sorry, we need just confirm what's the issue. Can you still hear me? We need confirm, or maybe there's somebody who can't hear me. I believe I'm audible. As I said, it's always advisable you introduce your children in the early age into the investment, so that when you're passing that wealth to them in form of shares, they are not tempted to sell. They can continue investing. And AIB gives you that opportunity to open junior accounts, minor accounts, where you can invest on behalf of your children, so that when you're passing the wealth to them, they already have something. So again, dividends and privatization, those are the main ways you can make money in NSE. So how then do shares help you as an investor? First of all, wealth growth. When you buy shares today, you buy at a certain price. You'll see that in the platform when you come to the demo. I want to first go through the theory. So if you buy today Safaricom, let's say at 28, and I will explain why the price is capped at below 30 for Safaricom. Don't expect it to go up between now and first quarter of 2026, maybe after that. And I will explain why you're there. And this is the right time to buy Safaricom for those who have been asking, can I buy? And you see how to target lower prices. So when you buy at 28, and the share price in future goes to 50, 60, that price difference is the profit you make. But remember, you only realize that profit when you sell. So you grow the small amount that you deposit, or the money that you deposit to buy shares, you can grow it through price movement. And remember, for shares, the returns are not usually guaranteed. They can go even above 200 or even 1,000%. It all depends on the price movement. Then there is income through dividend paying stocks. So this is profits that are shared by the companies to you as a shareholder. You don't sell your shares. You buy shares for Safaricom, they announce dividend, and they say book Russia, let's say it is, let's say tomorrow. So the shares you will have tomorrow, the total is what will qualify for the dividend. Then they say maybe for every dividend we are giving, for one share, we are giving 2 bob. If you have like 1,000 shares, that is 2,000 that will come without you selling the shares. Remember, your money is still growing. If the price is still going up, you're getting free money through dividend. And you can decide at one point, then you take some profit or take full profit. Either you withdraw, though for me, I always advise when you sell and you don't have expenses, move that cash to another stock. If you take profit, take to another stock. Or you wait for the prices to come down. If you still want to buy Safaricom, buy lower again. When it goes up, sell. But remember, when you're doing that, there is always cost on both sides. The other way is through compounding. Compounding is where when you receive dividend, you don't use it to pay bills. You don't use it for entertainment. You deposit back. Remember, dividends are paid directly to you as the investor by the registrars. When you receive it in your bank or M-Pesa, don't use that money. Return it back to your trading account, the normal way you deposit, then buy more dividend stocks. What are you doing? I have done this in the previous videos, where you're using a dividend to buy another dividend. Then that dividend, when it comes in, you are using that same dividend to buy another stock that is giving you dividend. And with that, you are compounding your returns. That's how investors grow wealth at NSE. So you buy, let's say Safaricom, it pays you dividend, a good dividend. You return that dividend back. Let's say maybe equity have announced a dividend which is active. You buy now equity. When that dividend comes in, you buy now the next one. Maybe that time KCB have announced. You are using now dividend to grow your portfolio. And again, remember you're also doing top up with your free cash. You grow enough shares such that at the point of your retirement, either you have dividend stocks that are paying you dividend regularly. Remember, dividends are paid, there are those that announced between February and April. Then there is June to August and October to November. So you have staggered such that your dividends, it's like you're getting nearly every month something coming in. And remember, you are in retirement. It's like a salary. You have not sold these shares. That time, maybe the prices have gone way up, and you can decide it's time now to even sell them or pass over to the beneficiaries. So where you're using dividend to buy another stock that is giving dividend, that's called recycling. And there is also dividend reinvestment where you're returning back to the same stock. Then it also protects you from inflation. Remember, if you are to go to other products which are affected by inflation, it means your investment is affected. Remember, share prices are not tied to inflation at all. They are tied to market demand and supply. And remember, demand and supply, they are controlled by company performance and what is happening in the market, and also other sentiment from the public. It could be social media or even news or even politics. So inflation doesn't affect your investment at NSE. Tax measures, they don't affect you. Interest rates, they don't affect your investment at all. Your investment is only affected by anything that is affecting the company directly, and also whatever affects demand and supply directly. So then, how do these shares help the company you are buying? Let's say you are buying shares from Safaricom. When they list the first time, you're giving actual cash to that company. They can use that as a capital for expansion and operations. Remember, you're becoming a part owner. The company gives you part of the shareholding, you become a shareholder, then you give them money. Then reducing reliance on debts, because you have given additional capital to the company, and improve transparency and governance. So then, while the long-term investor use shares, we have 3 categories of investors at NSE. We have short-term, we have speculators, and we have long-term. I'll start with speculators. Speculators are day traders. You buy in the morning and you expect maybe within that day the price have moved, or within that week, or within that month. So when price moves in your favor, you sell. That is pure speculation, because you are buying anticipating price will go up. If it doesn't go up, remember now you are on loss position in your sale. However, you can hold when prices go down, you wait when they rebound back. And I'll come to the point where you need to buy when they are low. Then we have short-term investors, because it's less than 5 years. You are targeting to just gain through price movement and maybe pick a few dividends. Then we have long-term. Long-term is where you don't define your term from 5 years and above, where you are looking at either growing your wealth. Then when prices go up in future, which is not defined, you can sell, or you can hold for your retirement, then pass over to your generation. So shares are good for long-term investment horizons. Remember, prices for shares are never guaranteed. They can go way up to whatever price they can go. Take a good example. Shares like equity. There was a time it was trading around 13 when they did a split some time back. It has gone way back to 69. Within that duration, there's somebody who have made triple that money. I don't want to use the example of Uchumi because that's not a stock. Actually, I'll come to the end of this presentation. I thought you don't need to get into some of these stocks. Let's take even ETFs that are trading at NSE. There are only two. There is Absa Gold and also SMWF. If you look, when there was a bit of speculation in the market, there is a time they would go and hit over 7,000 in price, from a price of around 2,000, 3,000. Already you have made some gains, but remember, the higher the price, the lower the number of shares you hold. Also align well with dollar cost averaging. I'm coming to dollar cost averaging. That's where you buy shares continuously, and you buy, especially when prices go down, you buy in huge quantities. You try to lower your prices, your average cost. Then also dividend strategy. There are those who just want to get dividends. You buy, you continue accumulating dividends without selling. And if you look at some of stocks like BAT, they are purely dividend stocks. You hardly see huge price movement, but they give good dividends. Those shares, you never see them trading heavily at NSE. Why? They are held by most of people who are in retirement. They are just accumulating dividend. They hardly sell. These stocks that give high dividends, they are owned by people who are already in retirement or those still working, but they concentrate on dividend stocks. They hardly sell because for them, they just want to accumulate dividends. Then also build sustainable and long-term wealth. As I said, shares, you're becoming a shareholder of a company. So you own part of that company. If it performs well, remember your shares are also performing well in NSE if there is good demand. Remember, demand and supply is what moves the prices. It has nothing to do with the company performance. If company performs well and there are people willing to buy, then they are the ones who push prices up. A company can perform well, but people are willing to sell more than the demand side, so they push the prices down. So then what happens when you buy shares? And here we are talking when you buy from secondary market, like what we are doing today. When you start buying shares, there is somebody who have listed their shares there, they want to get out. And you want to get in. So what happens? When you buy shares at NSE, you are buying from another investor who wants to get out. You are not investing directly in a company. I said, when you're investing directly in a company, it's only through several ways. One of them is IPO, initial public offer, like the one that is coming for Kenya Pipeline. That time you'll be giving Kenya Pipeline money. You're not buying from existing investors. You're just giving them money. They give you part of their shareholding. You become a shareholder. They use that money to pay bills and whatever debts they are sorting out in expansions. Or through a rights issue, where a company have already listed at NSE. Remember, they can't do another IPO. So the only way they can do is give the existing investors a chance to get additional shares at a discount. At that point, if you're not a shareholder, then this person who is entitled to additional shares can sell that to you. Then you apply for those rights at a discount. So remember, the person who already have shares, they are getting at a discount. If you don't have shares and you want to get in through a rights issue, you first buy from the person who have, maybe at a discount, and also pay the discounted price. Like for Safaricom, instead of government selling directly to Vodacom, they would have Safaricom would have given rights issue. Then the government floats those shares to existing public shareholding. But remember, they'll be selling at a discount. When they are selling to Vodacom, they're selling at 34. If they are selling to you as the public, remember they can sell you at 28, which is the current price. Even you would argue, why would I buy additional shares at 34 yet the share is trading at 28? They would come at around 20 or even below 20. And I think we need to differentiate now politics from the actual happenings at NSE. I've seen where people are arguing government should have sold to the public. You as an investor, would you buy Safaricom at 34 and it is at 28? Would you rather buy from the market or from the government? You see now for Vodacom, it's very easy because for them, they can buy at 34. So the other way company comes in and gets money from the public is through corporate board. They borrow from you as the investor, as public. You don't need to be an investor of that company. Like what Safaricom did, they float a board. You loan them the money, then they'll be giving you interest. Then at the end of that board, they return back your principal. If it is 50,000 you gave them, they return 50,000 plus the final interest. So you'll be gaining through interest and your principal is guaranteed back. For Safaricom, it was actually interest. It was tax-free because it is an infrastructure board, a corporate board, but infrastructure. So those ones, they don't attract withholding tax. So you are getting full 10.4% annual interest paid semi-annually. So you get half of it in June, the other half in December. Starting June 11th, 2026. For EABL is May, around the same time, May 2026. Then the other one, November, for those who applied. However, you can buy from secondary market. That's the only time the company is getting money directly from the investors. When shares are trading at NSE, you're actually buying from an existing shareholder. Winfred, I can see you're saying you can't hear it. The rest, can you hear me? Am I still audible? Okay, Winfred, maybe you can drop then join in. And for those asking whether you'll be able to access the link, I will also share the link on the same Teams chat later. So if you come back to the same link you joined, I believe you'll be able to see the charts. You see the link, but I'll share the link to the YouTube channel and also to WhatsApp community and Discord, where we usually discuss with other investors, so that you can also join conversation. And these videos will not be on AIB Access YouTube channel. As you notice, I'm also going outside brokers mandate. For us, we're not supposed to talk about what happens in the market. We're supposed to tell you how to trade. For me, I want you to know how the market works, so that when you get in, you don't even need a broker or any advisor. You can do it yourself. So when you're buying shares, you're buying from another investor. What is that investor doing? Either they are taking their profit through you. So they are selling to you, you give them the extra portion. They bought at a lower price, they are selling to you at a higher price. Would you want an investor to take advantage of you? That's where now comes in. When you buy shares, you also target to sell at a higher price and gain. So remember, when you're buying from NSE, you're buying from an investor who is taking profit, or an investor who is moving away from that share. Maybe it's not performing or they need money urgently. At that point, they may be selling at a loss. And that's why you need to check, is this company fundamentally right? Not technically, fundamentally. Are fundamentals right? Am I getting into a company that can collapse anytime? A company that is making profit? So that can tell you, will I still continue enjoying dividends? Will I still gain through capital gains? Because when you buy, somebody has sold their shareholding to you, you become the new shareholder. You are entitled now for dividend going forward. If the company is giving dividend, then they cease becoming a shareholder. They may have sold to you at a profit. They are left. Do you still want to sell at a loss? That's why understanding what you're doing at NSE secondary market is very important. Primary market, I said IPO, rights issue, corporate boards or private placement. Those are the only primaries where you buy directly from the company. The rest, secondary market, when you are buying now from through the broker platforms, it is secondary market. You are buying from somebody who is exiting. So the sellers may be taking profits. So they are selling because prices is in their favor. They bought low, sold high. Or they did DCA, as we come to the next slide, dollar cost averaging. So they have lowered their cost down and the prices have gone up and now they are in a profit position. They want to take that profit or they need cash at entry. They are just selling or dumping shares because of fear or loss of confidence in the company, or what happened with Uchumi, where people hyped up just to push prices up. We came in, we wanted to buy, push the prices up, they exited through us, and now we are stuck with a share that is falling. So always check why are investors selling. When you come to online portal, you realize there is a way you can track who is buying and who is selling. If it is locals who are buying and selling, there is no foreign participation. You need to know, is it local institutions, that is fund managers and custodians who are buying, or it is retail? A share that is traded by retail is usually a weak stock. You never see institutions and foreigners getting into stable growth stocks. So if you find it's foreigners, then you know that's a good stock. If they are buying and selling, so you know that's a good stock. If they are selling, then they are taking profits, maybe moving to another stock. Or if they are buying, then that's a stock they expect the prices to go up. Remember, for foreigners, most of them, they don't come in to take dividends. Why? They are liable to pay 15% withholding tax. And some of them in their country, they are required to declare that tax. So you hardly find a foreigner getting in for dividend only. For them, they usually do capital gains. Remember, in Kenya, we don't have capital gains tax. It was repealed through CASIB. CASIB is the Association for Brokers and Investment Bank. And remember, NSE is 30% is owned by the brokers. So they are the ones who lobbied the government to remove the capital gains. So it's not there. The only tax you pay is on dividend. 5% for the locals, 15% for the foreigners. So for foreigners, they have you hardly find them taking dividends. And even if they are taking dividend, it's those who have a custodial account with a local custodian like a bank, not directly with a broker. A non-trading custodian. I don't want to go into these terminologies in detail now, but as we continue, you start learning who is a broker and why you need a broker, an investment bank, and who is a custodian, a non-trading custodian. Those ones, they just hold shares on your behalf, but they trade through broker. The reason why I'm saying this, I've always seen this discussion to why do we need a broker to trade? You need a broker to trade. Even bank custodians, they need a broker to trade. You can't trade at NSE if you are not approved trading participant. So as a client, you go directly through the broker. Fund managers and custodians, they submit their orders through the broker. So those are the ones who are allowed to trade, and it is there by regulation. If the public wants to remove the broker, the only thing you can do is go back to Parliament, they undo the whole CMA regulations and do away with the broker. When they do away with the broker, remember, NSE was formed by brokers. It was formed by the brokers. Well, brokers sold 70% back to you as a public. They retained 30%. So it's like telling, it's the same thing, like where you have rented your house, you are telling the landlord, I can replace you. It's not possible. So again, when you're buying shares, know why somebody is selling. Either they are taking profit through you, or they need cash urgently. So for them, they just sell it with whatever price is in the market, or they are dumping shares at a loss because that company is a loss-making entity and they want to reduce their losses through you. So it is you to make a decision. Then why do I want to buy from these people? If they are making profits through me, then I need to make profit in the market. And I said two ways, dividends or capital gains. If somebody is just dumping a good stock at a lower price, maybe they want money maybe to settle bills, then you can get it. But target higher price. So you buy low, sell high. If people are just dumping shares like Uchumi, KQ, and the rest, you have seen them, the ones which have been on gainers list from early this month. You have seen them, the gainers. Huh? I don't want to go into details because I've seen them being shared all over. You don't buy those shares because you'll be stuck with a share that you sell at a loss. Huh? They are called penny stocks. I'll come to the end. I will highlight them. Huh? You find people are just dumping. Like Uchumi, those who bought it 1.9, right now they are dumping at what you see in the platform, 1.1. So you have lost 0.8. If you bought like 1 million shares, then you can see the loss you're going at. So your purchase doesn't give you, it doesn't give new money to the company. So when you buy shares, you're not giving company money. That's why you need to make profit in future through dividends and capital gains. With that, I think now we go to when companies get direct money directly from you. As I said, IPO, initial public offer. The first time shares are sold to the public, like Kenya Pipeline, when they come in, hopefully next year. And as we discussed in the previous session, I think it could be the 13th or the 12th. Once I share the link to that YouTube channel, you can go and check. IPO, they just float the shares. Then you go to your broker. Forget about the brokers who have been given that mandate. I think there is readings, the transaction advisor, there is lead sponsoring, co-sponsoring broker. Forget about those terminologies. If you already have an account within a broker, it's the same broker you use. Those ones, they have been given mandate, one of them to lead the transaction, do the marketing. The noise you hear on the social media, also through bloggers, through our main media houses, news, then investor education, road shows, all those adverts you see, that is the role of the lead sponsoring broker. Co-sponsoring brokers, they are the ones who prepare information memorandum, the book that will be sent to you that it defines the shares that you get at what price. The broker you have in the account, whether it is AIB or any other broker XYZ, whichever broker you have, you go to that broker in a price. The reason why I'm saying this, you may have an account with one broker. Then you see it is Diane Prayer who have been given that mandate for co-sponsoring. And you think, I need to have an account with Diane Prayer to apply for Kenya Pipeline. If you have an account with the AIB, that's the final. As long as you have an account with CDSC and you know your broker, that is the only thing you need. So when the KPC comes in, you just go to your broker, they give you the form filling. If it is online, you select your broker, your CDSC number, you apply, you pay, and that's it. So the initial stages of IPO should not worry you at all. Even if you don't see your broker there, no, at the point of application, I don't want to talk about KPC. I think that one I can talk after that booklet is out and all details are out. But checking at the brokers who have been selected, you can always tell what you're getting into. So you need to really interrogate that booklet when it is out. When information is out, even the pricing, check. Why am I saying this? I've seen there is a share, is it this week, which had a demand but no supply. And there's some element of government control in that share. During this time, between now and the time Safaricom sale is completing and also KPC IPO is completing, you see some stocks that will be trading below their price. You see some which goes up, but some trade within a certain price. You find there is no even supply, but prices are not going up, or there is no demand, prices are not going up. They are stagnating somewhere. That should tell you what is happening in the market. That is the right time to buy some of those stocks when they go up. Remember, because government will be controlling some of these prices indirectly, at the point where they shoot up, some of them just offload. But for Safaricom, just hold. Then rights issue, as I said, existing shareholders buy new shares at discount, but they can sell off to the public who want to get in. then money goes to the company. Private placement, you buy directly from the company when company is privately raising their capital or corporate rules. That's the only point where your money goes directly to the company. The rest, if you're buying from NSE, as I said, you're just buying an existing shareholder. Maybe they're selling to you at a profit. That's why you need to know what you're doing in the NSE. So secondary market trades, you're just transferring ownership from one shareholder to another. Primary markets, IPO, rights issue, private placement, company receives capital. Then later you can come to secondary market and sell to other people. So always understand why shares are being sold before buying. Why? I've said about uchumi, people are dumping. Do you still want to be the person who you give others money, they take profit, they leave you with the stock that you sell at a loss? Or, unfortunately, because signs are there, it is suspended. Then you are left with a stock that you can't sell. You have Mumia's Century, which you can't sell. Or, worst case, the company is liquidated. And that's why in the 13th episode, I think we may have done financials. In the 15th one, now we've got the company financials so that you know how to interpret balance sheet. In balance sheet, you have liabilities and assets. Whichever is higher than the other one, you find it includes share equity, is shareholder equity. If you find shareholder equity is in the liability side, that's a company that can be liquidated and you as a shareholder get paid back your money. If you find the shareholder equity or equities is in the assets part, it means liabilities are more than assets. If that company is liquidated, the assets will pay the liabilities. Then the money you are owned as a shareholder are also used to pay those debts. Meaning what? All shares listed at NSE sold, that money is used to pay those debtors. That's why it's very important when you're buying shares, always check balance sheet. And the first thing, you don't need to be detailed. Don't even try to do detailed analysis. Just check current liabilities. You check total liabilities is this, total assets is this. Shareholder equity is on which part? If it is on liabilities, it means the assets can be sold, they pay the liabilities, and shareholders still have part of money to be paid back. And remember, every time a company is liquidated, there are two types of shareholders. There is the preference shareholders and ordinary. Preference are first paid, then the ordinary are paid later. So you need always to check, because if equities is at the assets part, that is you have the liabilities, then you have the assets, then within the assets you have the element of equities. It means if the company was to be liquidated, it's so assets which are being sold, including your shareholding, to pay liabilities. Which liabilities, debtors, and other debts they owe. A good example of liabilities, remember Safaricom did a green shoe board. Again, what does that mean? In the liabilities, if Safaricom was to be liquidated, the people who owned Safaricom, green shoe board, are the first one to be paid. Then, so now, what happens like now for Safaricom green shoe board? The reason why it was called green shoe board, it means in case Safaricom is liquidated, remember what I said, the first thing they pay is the debtors. Then, in terms of the company shareholding, preference shareholders are paid first, then the ordinary shareholders. Now, the Safaricom Green Shoe Board is part of liability to the company. Remember, it's a board, it's a loan they took from you as the investors. When they pay, according to Kenya rules, the debtors are the first one to be paid. Why Safaricom took a green shoe board? In case it is liquidated, the people who are owed through this board are the first one to be paid. So green shoe board means the people who run that company, in case of liquidation, they are the first ones to be paid. Then they settle the debts. Then after that, preference shareholders, then the ordinary shareholders. That's why it's very important when you're buying shares. Preference shareholders, they have like special rights in the company. Like a good example, in Safaricom, we have Vodacom and government. It means if it was liquidated, they are the first one to be paid. Then you come now to the actual shareholders. Remember, within the ordinary shareholders, there are those who used to be shareholders before. So those ones, they are paid. Then the ordinary ones are the ones we buy from the market. They're the last to be paid. Why am I saying this? I've seen people trying to joke with Uchumi. Uchumi, you can tell where it is headed. Already, when they were listing, their core business was in retail business, that is supermarket. When they closed their shops because of the market competition, we have seen even some of the Tuskys branches being taken over by Quickmart. It tells you these are sector that's quickly changing hands. Even Naivas, they still have competition from even Carrefour and other upcoming supermarkets. What does that tell you? Uchumi's future is not in supermarket industry. Even if they open so many shops, they still have debts and suppliers they need to pay, and also staff members. That's why they built in, I think there's more they built. It was rented by, I think, China Square. But remember, that is just one tenant. What if that tenant one day just wakes up and decides to close? Or something that happens and they need to relocate? It means that floor is vacant. Will they still announce profit? Remember, they are still under CMA watch. Why? Because they still owe debt to their creditors, the ones who, the suppliers. And these suppliers have already taken them to that. What would happen to Uchumi? That's why they reported this as small profit, just to align with listing regulations. Otherwise, they were headed for suspension. And I believe it won't go too long before you see some of the things happening. I think NSE and CMA are coming up with another regulation where most of these penny stocks, they go at a different board. If they meet the regulations now, they can be moved to the main board. Why? Because when they are still in main board, people are speculating with those prices. You buy when they go up, sellers have already sold to you. You are up with a stock price goes down. You are up at a loss making company. So those loss making companies believe NSA should be working on something with CMA to make sure they are removed from the main board to protect you as an investor. The worst that can happen is that price to go down below 0.1. It will be suspended like years. You can't sell. Remember, they still have a court case with the creditors if they have not completed paying their debts. What will happen? They need to be liquidated. Which money will be paid for? Remember, it is your money. That's why some of these stocks just keep off. Now I believe you understand why I can't put these videos on AIB YouTube channel. Because as AIB, we are not supposed to tell you some of these things. If you notice on our daily recommendation, our research team didn't tell you directly. They didn't tell you directly not to buy Uchumi. They told you sell. They told you sell. That's a direct signal. But Peter is here telling you, even if it goes back to 0.1, don't buy. Put your money where it serves the purpose. So let's now continue to the next slide. Let me lower this one so that I want to see the attendance, because so at least now you understand the shareholding and when you buy shares, what happens. So now let's understand market, NSE market reality. Now we are moving from theory now to the market. We have seen prices falling down and prices going up. And most of us, they panic when prices go down. Like this, I want to address this holiday period between now and February. NSE holiday ends February. That's when companies start announcing dividends. So during that time, you see price fluctuations going up, going down. But what happens? Why is NSE falling? You have seen last week. I think this week some of the stocks have tried to peak, but remember, it's a cycle. You see fluctuation go down, up, down, up. It's because of reduced demand as investors prioritize cash needs. We are in holiday. People need to take their children on holiday. We have school fees coming in January. This is a daily duration where most of the companies are closing this week and they will open for January. They need cash for spending during that period. So what does that mean? There is reduced demand for shares and NSE. But this is the time now you find smart investors getting in. You'll be shocked to see foreigners coming in. And most, we'll see in the platform, you'll never see foreign trades and orders. And once you log in, I'll directly watch on market depth. You'll never see 1 million shares floated there. But if you go to volumes, you'll see between morning and now, maybe 10 million shares have traded. In your other, you have not seen them. There's a way they place the orders. So during this time, that's when they buy slowly without you understanding they are buying from you. But as we panic, because market is falling, we want to buy, to sell, so that you lock in few losses before market maybe stabilizes at the bottom. But remember, from February, market will rebound back when companies start announcing results. That's why you find you sell too early. Then when prices go up, you're regretting why you sell. Unless you sell, you don't lose. Shares are not like Forex or CFDs where you are directly losing when prices go down. Remember, for Forex, when it goes down, you are losing directly. If it is CFDs, contract for difference, we are becoming this when we are doing international stocks. Whereas you are speculating on movement of a stock, price movement of a stock, you actually lose directly when prices go down. That's why CFDs are risky. Shares, unless you sell, even if it goes to 0.1 and that company is not suspended, and prices rebound back above the price you have bought it, you'll still be in a profit until you sell. If you buy today and shares go up 10 times and you don't sell, you don't realize that profit. It will just be profit in paper, which you have not realized. So you realize loss of profit when you do the actual sale. Again, we have through foreign and institutional participation. Remember, even institutions, they'll be closing, some of them. You may find there is low institutional involvement in NSE for this duration. That means retail alliance driving the market. And as retail, we also want to sell to get money for school fees and holidays. So supply suppressing demand, prices going down. And it's just a normal market cycle. December, January, early February, expect prices to be low or stable. Stable means they're just fluctuating within a certain range. Maybe a stock is trading between 16 and 13. It doesn't go above or below that price. But that is time now. You start buying. And don't panic and sell. Don't try to take your losses too early. The best thing you can do is to buy low, average your cost down. We'll see that in the next few slides. Why then falling prices are good for you as a patient investor? One, lower prices, they allow you to purchase more shares. Remember, if you're buying share at 30, another person is buying at 25, the number of shares you two buy are different for the same amount. The lower the price, the higher the number of shares. And remember, the higher the number of shares, the higher the dividend. And also, capital gains if prices move up. So always target to buy lower prices. We'll see when we get to market depth how you can pick grow prices. For the beginner series, I've always told you, pick what is available on the supply side to buy immediately. Use market orders to pick, because that was beginner. You need to get footing into NSE. Now you'll understand how you can check even for lower prices and use the settings on the order entry screen to maximize on your cost. Then it reduces the average buying cost over time. Remember, every transaction you do, it is tied to a price. Like if you buy 100 shares of Safaricom today, there is a price you buy at, let's say 28. That you find in the statement. You see the actual price of 28. When you got portfolio valuation, you find it's around 28.5. It's nothing the broker have added. In portfolio valuation, that price includes cost you have incurred. So the average cost you're getting there is the cost you have incurred to buy shares, the actual cost. And it averages all the trades you have done, starting from the current working backward for each share, giving you the average price and the average cost, so that you compare that with the current value and get the profit. We'll come to that. So when you buy shares lower than your average cost, you're pushing that average cost even further down. Remember, current price, when it goes up, you'll be in profit position. Also, strong companies still remain fundamentally intact. Even if prices are going down, a company like Equity, KCB, they are still only selling loans to their customers. They are making money. Safaricom, you are still using their services, M-Pesa, data. If it is EABL, we are in holiday. BAT, we are in holiday. Unfortunately, in the market, you're taking advantage of other people. You know, EABL and BAT, the product they sell. So when those people are consuming those products, company makes profit, you get dividend. So during this holiday, even if EABL prices go down, they're actually making profit. What does that mean? Prices in the market are not linked to company performance directly. It has to affect the demand and supply. Then you high future returns and dividends. So if you're buying more, as I said, remember you're buying more shares. Prices go up, you sell profit. Dividends, when they are declared, you bought more shares, again, higher dividends. So then how do you position yourself as an investor? Like now, this is the time to accumulate when prices are down. Accumulate quality dividend paying stocks. And again, quality dividend paying stock. Quality dividend paying stocks. Not the way those terms go. Quality dividend paying stocks. Why? You need companies that are performing, that are giving good returns to you. You need a company that is declaring dividends and they do the actual payment to you. Or if they're not paying that dividend directly to you, they are paying that dividend in form of bonus shares. Dividend, there is cash dividend and there is bonus dividends, where a company gives you additional shares, but they reinvest that profit back. So you get more shares, which translates to what? More future dividend. Like what Williamson, is it Williamson or Actual? One of them, they did bonus. They give you additional shares, which are free. You have not incurred anything. You can decide to sell or even hold them now for future dividends. So you want to buy into those stocks. Then apply the discipline strategy like dollar cost averaging. This is the song now we'll be singing, dollar cost averaging. And I'll come to it in the next now in details. Then focus on fundamentals, not short-term price moves. Technical analysis will give you how the company prices will move. But in NSE, things work differently. They don't move because of technicals. They move because of fundamentals. Because you, as the people who are buying, have seen this company is profitable, have good management, have innovations, have future growth. You want to buy. All of you come in. Then the sellers decide, this is a company that can give me dividend in the future. I won't sell. Which means what? Demand pushes prices. Remember, fundamentals, you can never analyze them through the formulas. Maybe a few of them. But remember, when companies are announcing results, these days, I think there is the new, is it accounting, they're called what? Principles, which you revalue an existing asset which you had reported last time. You're revaluing, and it looks like it is also part of the profit. So if you have to use now those financials now to analyze stocks, you get different results. That's why just looking at the company, you can tell what are they doing, how are they making money. In future, how will they make money? Those are the questions as the investor ask yourself. Then you start building long-term positions at attractive valuation. That is, you start looking at the future. Prices can go up. If I buy raw, then I'm incurring lower cost for my portfolio valuation. Then in future, when prices go up, I can sell in profit. Or when this company makes money, they can give me a good dividend. Now we come to this year, dollar cost averaging. I want to go through the slides quickly, then we come to the platform. So what is dollar cost averaging? In theory, if you have to go to ChatGPT and also Google, it tells you investing fixed amount over time, regardless of the price. So at one point you are buying high, at one point you are buying low. Yes, when you're buying low, you have more shares. When you're buying high, you have few shares. So basically, at one point, when you buy more shares at lower prices, the average cost goes down. But remember, investing fixed amount. It will never push your average cost lower than that. So in NSE, the way DCA works is investing flexible amount depending on your disposable income or what you want to save at NSE, because NSE, you're actually saving your money consistently over time. What does that mean? When prices are high, don't buy a lot of shares. Just spread, if you have like 5 stocks, just spread in all of them. Buy small units of each. Remember, it's at a high price, you have bought few shares. When one of share price drops down, stop putting that money in those stocks. Come to this one which have dropped in price, put a lot of money, buy more shares. The price you bought it high, you have reduced it further down. When another stock drops in price, again allocate more money in it. So here you're not investing fixed amount. You are checking this share, the price have gone down. Let me buy more of this stock. So you buy Safaricom, like now it is 27. You allocate like 50,000 Safaricom. Then you can say 5,000 to KCB and equity. I'll be buying more of that because prices are high. Then when Safaricom rebounds back to 40, you don't want to buy more shares. Equity, maybe that time I've come to that. You want now to accumulate more of equity. So that way, you push your Safaricom cost down. When it went up, you're in profit position, you're just watching maybe to take some profit, or you don't want to add more. Equity have gone down, now you buy more. When it goes up, you also put it in watch list. You can decide, let me take some profit, or you just leave it. At this point, maybe another stock which you don't have in your portfolio have dropped in price. You buy more of it. So DCA works when you buy more shares when prices are down and few shares when prices are up, so that you push your cost as much as you can lower than the current average cost. When I log into the platform, I'll show you. So in theory, it says fixed amount, 20,000 every month without considering the prices. You buy. But remember, that time you're putting, maybe that's when the prices are always high. So you're not doing this here at all. If you're doing dollar cost averaging, that's for every cost you're incurring, you're reducing that cost way down further, so that when prices go up, you'll be in a profit position. So always aim to buy shares at cheap prices. When we come to market depth, I will show you how now you select the prices. So you do it practical. In the previous recorded videos, I did screenshots. This time now I do practicals. So when you invest now fixed or flexible amount over time, you aim at buying more shares when prices are low and few shares when prices are high. Remember, even if you put 50,000 and prices are high, you are buying few shares. If prices are low, you're increasing the number of shares. And remember, the averaging, the way it works, is the shares you have bought that day times price, the shares we bought yesterday times price, you add that total cost, you divide by the number of shares. So if you have more shares than the cost that you have incurred, maybe the ratio is not that huge, you reduce that average cost down. And remember, that is the cost you have incurred to buy those shares. So when the prices, the current value moves above your average price, which is called break-even point, it means now you're in a profit position. You notice now your portfolio is in green. So for the investors who have bought shares high, apart from penny stocks, Uchumi and the rest, if you have bought the other shares high price, target now to buy at lower prices, you'll reduce that cost down. Then when the market improves, maybe in future, you'll be in a profit. But remember, when you're still buying, this company is still giving you dividend. So focus on long-term accumulation. Don't try to do short-term trade at NSE. I usually see investors ask, if I buy today, when can I sell? Immediately you say that you are short-term trader. And you start changing prices. Remember, social media, you have people who are waiting for you. They will come and say, Safaricom, you go up. That time you're not panicking, it goes up. They sell to you. You have bought prices maybe rally a bit. Then when they fall down, you have left a stock that you can buy. Like what happened with, I've not moved the trade. If I'm still on dollar cost averaging by Irina. I hope that's what you can see on your head. DCA, that's where I am. And I'm on point, is it 3? The focused on long-term accumulation, not short-term trading. So you are looking at buying more shares when prices are down. Only sell, and I will always advise you, even if broker tells you sell is a recommendation, don't sell. Go to your portfolio valuation. You have access to it, you see on the platform. If it is in green and you're ready to take that profit, take it. Even if Peter tells you sell, first go to portfolio valuation. Profit is 20,000. Am I willing to take this profit or I wait for it to go up again? It is a decision, you just make it independently. That you have in portfolio valuation. So how to use DCA to lower your average cost? You continue investing during price decline. Like now this holiday, it is time to buy. There is in the previous videos we have talked about open days. Open days is where prices are not limited to 10%, but limited to the upper side, to the highest, but the lowest can go all the way to 0.1. Yes, even Safaricom are navigating. They're only limited on the upper side. The lowest you can buy or sell is 0.1 Kenya shilling. On open day, prices are not limited. That time is also a good time to buy. Watch, we'll see the market depth. Before that market depth is locked, try to play around with the prices. Put the lowest. And that time put order very early in the morning before 9:30. Remember, as I've said in the previous videos, we think we are past that hour. Between 9:30 and 11, it is usually called chaos. That is when a lot happens. Some shares will execute at high price, others at the lowest. Before market cools down, you realize either you sold at a loss or you sold at a profit, or you bought at a higher price or at a lower price than the market. That time you need to be very careful between 9:30 and 11. But after that, that's when foreigners come in, institutional traders who don't chase prices and market stabilize. So in open days, target the 9:30 to 11, we do just play around with the price before now demand and supply lots. Then when you're buying, target when sell side broke the buy side. Usually they push prices down. No? That is, you find on the demand side, on the bid side, it's empty. That is the time to buy. And wait for prices to come down. Now that time hits quickly before prices rise. So open days usually book closure, ex-dividend date, that's after book closure. Ex-bonus date, that's 1 day after bonus have closed. Then when now companies are announcing financial results, like between February and March, you'll see companies announcing final results. The day they are announcing, it is open day. When there is profit warning, when a company announces profit warning, that same day, it is open day. Or when there is a material announcement, it is announced by NSE. Most of those days, they are open days. So when you are placing the order and you see the price is 0 to the highest, it means that share is open. Huh? I will show you in the screen. Huh? So how to use the DCA to lower your average cost? Please just continue investing during price decline. Increase share counts at lower price. So you buy more shares when prices are low, and gradually reduce overall average buying price. So when you're buying at lower prices, more shares, you're pushing your average cost further down. And that improves long-term profitability and your dividend yield. Maybe in the next training, maybe next week, I will do how now you do dividend yield. We are used to dividend divided by the price. Remember, that's when you're buying new shares. If you already have the shares, it is dividend divided by your average cost. That's why you need to reduce your average cost. But you need to know the dividend that I'm getting from this company, is it worth the cost of incurred? If you have shares and you want to buy more, now you do the average, again, average price of what you're buying currently and the current average price. That we'll do next week. And always confirm your average cost from portfolio valuation. So let me do this to then we log into the platform. I first go through that. I believe the next is market depth. So why DCA works best with dividend stocks? Dividends, even if the prices fall, companies will still give you dividend. 2024, market went down because of finance bill 2024. And we all knew what happened during that time, even demonstrations. Most of the companies were to be affected by the tax measures that were introduced. So most of the companies may have closed or they were affected even in terms of operations. When that finance bill was repealed this year, we went back to 2023 finance bill, which was a bit stable for the market. That's why you have seen the market rebounding back. Even if I think we have finance bill 2025, which have been pulled in, it's not punitive like the 2024. That's why the market went down in 2024. If you notice, even during elections, we have never had a drop like what we had in 2024. Remember, these companies are coming from the COVID period and also 2002 elections, 2017. So 2017 elections, then COVID came in, 2022 elections, then finance bill. And between that period, I think there is one time we had a narrow and void in the elections that again affected the economy. So most of the companies were affected. So by 2024, when this finance bill was being introduced, most of the companies had way gone down in terms of their operations profitability. That's why prices went down. And now we are seeing market going back to where it was. It's not, it has nothing with prices going up. Prices are going where they were during that time. Check it, like most of the stocks right now, they are a bit stable. We don't have that price rally because they have stabilized where they were. Now, what you expect is those which are fundamentally strong, you see prices going up. This is where now you separate between stocks that you want to have in your portfolio and those you want to offload. Then, so companies will still give dividend when prices fall. Reinvested dividends accelerates share accumulation. Remember, when you're buying through dividend, you are buying more shares because this is free money you just got from that company without selling your shares. And these companies over time will still recover. Like now, it has nothing with company operations. It's just the general market demand and supply. That's when the prices are going down. When investors get back in February after holidays, they will now want to buy, they push prices up. This is that time now you wait. When they push prices up, you can decide, let me take my profit through them. So when they are selling at lower prices, you accumulate. When they come back, you can decide to take capital gains. For those who are after capital gains, then cash flow reduces emotional pressure because you're still getting money through dividends. You're not thinking, do I sell now or do I not sell? You know dividends are still coming in. There are instances where you can't use DCA. Weak companies with poor fundamentals. Penny stocks apart from Kenya CIC. The rest, don't try DCA on them. Because what are you doing? You are trying to buy a stock which is falling in price. It is a weak company. It doesn't have strong fundamentals to start in the market. At one point now, they are stuck at a lower price. Remember, you bought these shares. You don't have another way. Prices may never go up. So you are stuck with a loss-making stock. It also doesn't work on non-dividend or speculative stocks. Stocks which you are chasing prices can go down and stagnate forever. Even if you have lowered your cost, when will you sell at a profit? Unless the next speculation comes in, when will it be? I don't want to talk about money market fund because in a way it would also have played part in price movement. Some of these funds that invest in equities, remember they can spoof. I've talked about spoofing the market where you put a huge order, a sale order at the highest possible price, but not the current supply, so that people think this is a strong stock. They start buying, they push the prices up, they sell at a profit. Remember, they have to give interest to the people who have invested in funds. I don't want to assume that's what have been happening, but there are also chances, especially those funds that are giving high returns. Most of them, they invest in NSE stocks because of price movement. Like I can tell from 2024, most of them, they invested there. Those which have been giving good dividend, good returns in terms of interest. Then 2025, that's why I've seen most of them, the returns are way high because they sold at high prices. They have made gains. They need to give those gains back to investors. So I don't want to assume that because then that, even if it is not market manipulation, it's not good because it is taking advantage of the market. Then when a business model is broken, if you realize, like Uchumi, profits they are reporting from rentals, not from their line of business. Those are not stocks to do this. You'll actually be left with a stock you may not be able to sell. During regulatory governance or de-risking risk. Regulatory means what? When CMA announces this company, we have an issue with them. They need to abide by trading or listing rule. That's not a company you want to get into. It can be suspended anytime. And as I've said in the previous recorded session, suspension of a company happens mostly at night or during trading hours. Company will be suspended at 5 p.m. before CMA leaves the office. That's when they send notification to the media. You will see it at night. The following the NSE, they just switch it off. You can't sell or buy. It can happen even when you're trading. You have just submitted a buy order, you have bought, then the next minute company is shut down. You just see news, it is suspended. You can get to the market, you can't sell. So some of these stocks, they are very risky. You need to watch out. And if you have bought, get out. And when you are taking that profit, take it quickly and never go back to that stock. Those that have governance issues, you start seeing board and management, they are putting aside, it's not a stock you want to get in until they resolve. A good example, Kenya, there was a time I think CEO was suspended. If that suspension took some time before replacement, I would have advised to sell even if they give dividend. Why? Those are issues that fight into CMA. You even find even they have audit issues. That's what the government, the board and management are fighting over. You find it is suspended. So if you see governance issues and there is no immediate replacement, be cautious before you buy. And if you have made profit, that's the time now you start rethinking, do I want to get out or delisting? Remember, when a stock is delisted or suspended, there is nothing you can do. Ask those who have years to a century. Go even to High Court, even to Supreme. I will send you to the court for NSE. It is CMA. They are the ones who are suspended. So you can't go to CMA and tell them you just unsuspend this stock. They can't. CMA are the final court for NSE. If you have any issue even with broker, CMA is your court. And unfortunately, to say this, brokers fear CMA. A broker can pay you money. They be left fighting with CMA because they know what happens. So even companies, when they are delisted, it is CMA who does that. So if a company is delisted once, do you want to stay on it? Even if you're trying to work DCA with it, it will not work. Because prices, yes, will go down. But at one point, they will stagnate. The next thing, suspension. You are left in a stock that you can no longer sell. So before you come to market depth, let's first see portfolio valuation, where you check the averaging. I think we'll say the average cost. Then we see prices. For the prices will come when we go through the market depth. Let me first show you where you check the valuations. Then we come to market depth and we see how now we can use that for DCA. Let me open that. I'll come to Q&A. Let's first go through this so that we release who want to leave. Once I'm done, let me first log in to the portal. I will use the online share trading portal today. Then next week I will use the app. So I'll be alternating between the two, because there are details you can see on the app, which are on the portal, which are not on the app. Let me just log in. I'm logging into my real account, not a demo account. I will not go through the platform in details. This I'll do next week. Confirm you can see that screen with the platform, with our online portal. Okay, so the first screen is just referring none. So this is another way you can make money with the IB access. Refer a friend, they open using your referral code. The trades they do from the time we open account to 1 year, there's that commission we charge. We give you 50% back. Credited monthly, depending on their trading activities. You can share your referral code or copy link. The easiest is copy link sent to them when you open the account. Let me quickly close that because I don't want you to use my referral code. I'm a staff member, AB access. I'm not allowed to earn commissions. So let's first, for those who are new to this platform, understand how it works. On the left side, where there is our logo, there is notification, alerts, reports, available funds, transfer funds. Here you can get all the reports you want. I will just expand. The first one are alerts. Here you can set up security alerts so that when a share moves to a certain price, you get alert. We'll come to this hopefully before we complete, because it ties to DCA so that you know when your share reaches a certain price. We have portfolio valuation. We have statement. Statement is where you can track your cash any amount you put in and how it has been utilized. And if you want to know the actual price you have bought shares with, you check statement. Like if I go all the way to A, so you can see I've been buying shares throughout. There could also be some deposits in, but you realize here you get the actual price. So if you want to know the actual price you have bought shares with, go to statement. It gives you the actual price. But if you try to multiply the price times the share, it doesn't give you the amount that have been charged. Why? Because this amount includes cost. That's where portfolio valuation comes in. Portfolio valuation now gives you the shares, the average price, market price, value, profit or loss. So the security is the share you have, quantity is the number of shares, average price is what you are tracking. And this is what I said includes cost. It's not the price you bought at, it is the cost you incurred to buy shares, because this price includes cost. Then market price is the current price without cost, because you have not sold. Market value is the current value of your shares. Then if you have to multiply the quantity times average price, then you raise that from market value, you get a profit or loss. It tells you whether you're in profit or you're in a loss. Then the percentage, if it is negative, it means that share is in loss. If it is in positive, then it means it is in profit. Like now, if you look at CIC, I've made a profit of around 106, but there are few shares. If you go to Kengen, it's a loss, but I can't sell because I still want to hold on to these shares. These account for training. I usually use it for executions. So again, on this screen, just on the left side where there is a bluish, you have your portfolio value and ledger balance. Portfolio value is the value of your shares if you are to sell today. Then ledger value is the actual cash. Mine have a negative because I'm using credit to buy shares. It is a training account. Then net worth is the difference between your portfolio value. Sorry, not the difference. It is the summation between portfolio value and ledger balance. Why? When we buy shares, we debit your ledger balance, credit in portfolio value. So if somebody was to ask you, how much are you worth in NSE? You take the portfolio value, you add your ledger balance. That is your value in NSE. I don't want to go into details. Let's go back to home. We go to this screen. I'll come to these next week in details, but open is the market, not the account. Like today it will turn to closed, then 9:30 tomorrow, pre-open, between 9 and 9:30 pre-open, then after that it is open. Now below that you have shares. If you scroll on online portal, you have additional columns. Note you. There is one I want us to check called volume turnover, foreign buy and foreign sales. These are the screens that tells you which share, first of all, is trading heavily and who is trading. Like if you look at the column for foreign buys and foreign sales, where there are zeros, then some numbers start to appear, 135, 859. It tells you, like for this stock, let me check it is which one. I think it should be equity. This for, if I'm not wrong. Yeah, Cooperative Bank. There's a lot of foreign buying. Foreigners are buying into Co-op, but again, in small quantity. If you go to this other down here, I believe this could be ACB. Let me check. It is EABL. You find foreigners are also buying and some are selling. There is like kind of a balance. So then how do you know foreigners are exiting? When foreigner sales are more than foreign buys, or foreign sales are the ones which are dominating. On foreign buy, there is nothing. Like there is but these ones, they are small quantities. I think the only stocks, most of them, there is a balance. Apart from this that have 77, let me see, this could be Safaricom. which they are buying. It's INM. INM, they are buying heavily, I believe. Let me see whether it is INM. Yeah, it is INM. They're also buying into some of these stocks. Just to take advantage of lower prices, they lower their costs. So on online portal, the columns to look at foreign buy, foreign sell, then turnover column. Because if you realize a share on turnover is high, but there is no foreign buy or foreign sales, it is telling you it is locals who are buying. If quantities are high, then there is an element of institutional investors. You want to go into that stock. If quantities are low, then that tells you foreigners are not interested and local fund managers and custodians are not interested in that stock. Maybe it is a penny stock. You don't want to get into that stock unless it is a dividend paying stock. And I said there are only two: Kenya CIC. So portfolio valuation, you can also get it. Let me see where it is. I think there should also be another. We'll come to all this. If you click on the price sign on the bottom right, you can add additional screens. There is one for portfolio valuation. You tick on it, then you click see if it is added, and you can click on view details. Again, it gives you the screen we had, and we said most important, always track your average price. Average price. For those who came in the previous video, once I share that link for YouTube channel, just look for that video. I've shown you how to use stockanalysis.com to even track your valuation. No? You can use that. Like today, I can pick all these stocks, feed in all the average costs on that. Remember, there that average cost doesn't change. So me, I continue buying. At one point, I would want to know, my average cost going down. I will compare what I have in the AIB with what I paid in stock analysis that time. So I can compare the two. So stock analysis keeps that average cost permanent. So as you buy more, remember in AIB, they are changing the average prices as you buy and sell. So you can compare, am I averaging down or up? And you can also save. You can even take screenshots and save maybe frequently. When you buy, take a screenshot. Or you go to stock analysis, feed in, then download the CSV and save. This is what I wanted to show you. Let's go back to the presentation. We go to market depth. Now we come back to presentation. There's somebody who is saying they can't see the window. Did the rest see? Just confirm. Maybe we could be having a network issue. Just confirm you saw the platform. Okay, maybe Gbreast, you can drop then come back. But I'll share the recording, don't worry. And I'm always available on WhatsApp. You can always reach out, so then we can organize for a presentation. I take you through. Okay, let's go to market depth. Because now we have seen DCA how it works. We are lowering our average price by buying growth. That's what we have said. Investing flexible amount consistently, aiming to buy more shares when prices are lower. And at the end of it, what do we want to achieve? Lower average cost. How do you do it? It depends on market. All these screens, they are interconnected. It's only that in beginner series, we can't take you through these details because it will be overwhelming. Because you have to know how to trade. But now next Wednesday, for those who are just new, you can join now. We go again. Even those who understand the market, because there will also be advanced topics. So what is the market depth? Market depth is a screen that shows you the buy orders, bids, and sell orders, offer. So bids, offer. There are other platforms, instead of offer, they will show you ask. So ask, offer, and supply means the same thing. Bid, buy, demand. All those means the same thing. Huh? So buyers, bid, demand means one thing. Sellers, offer, ask. Again, selling side. Huh? You need to differentiate that. So market trade will show bids on one side. That is all buy orders at different prices. We'll come to that. Then on the offer side, all sell orders, different prices. And the reason why they are queued, they have not matched. For any execution to happen, bid and supply have to match the price. Either somebody sells at the bid price or somebody buys at sale price. That happens because when you're placing the order, you can see the price. You can decide pick what is on bid side. When you're selling, it executes. Or let me buy from a willing seller, it will execute. There are people who just want to buy. You just go to a broker, you tell them just sell. You don't give a price, they sell at market. Or when you're placing the order, as you'll see when we go back to the platform, you can decide, let me sell at market. What you're telling the market, just go into NSE market, because it's called NSE market, pick my order at whatever price or sell at whatever price. So those ones they match and there is execution. No? So market depth tells you how much demand and supply exists and at each price. Remember what we said, demand and supply is what moves the price. You want as a person who is buying to buy at the lowest price. As the seller, you want to sell at the highest price. That's why you want to see these prices, see where the pressure is concentrated, and decide where do I place my order. With that decision, you are assured you can do DCA very easily. So key components, we have bids, prices and quantities buyers are willing to pay. Offers, prices and quantities sellers are willing to accept. Then the spread, we'll go back to the platform. It's the difference between the lowest offer and the highest bid. The top prices on each queue, the difference. That difference in between, the gap between highest bid and lowest offer is called spread. The wider the gap, the harder it is to sell that stock without taking loss or buying that stock without paying higher price. The narrower the gap, the easier to sell the stock. First of all, it means that stock is very liquid and the easier for you to buy at lower prices or sell at high prices. So always check. A wider gap tells you that stock is a stock. When you buy, if you are to sell, you would accept to take a hit. Or even if you are buying, it's very not that easy to do DCA. But again, you need to know what type of stock is. With one share rule in NSE, when it was introduced, it narrowed that gap. These days, you can buy any share, 1 to whatever you want, depending on the amount you have. And remember, in NSE, you are not limited to one share. Like Safaricom, you buy Safaricom, no. You can buy any share you want. Equity, if you want, you can buy Safaricom, you cannot. You have seen on my portfolio valuation, I have several of them. If you want to own everything, you can buy. But remember, remove penny stocks, but from Kenyari and CIC. How do you do it? You buy slowly. You can decide. Let me start with Safaricom. Once I reach maybe 5,000 shares, I move to another stock. You continue like that. Now, these dividends that are coming from your 5 stocks, you can decide instead of investing back in the same stocks and there are other stocks which have gone down, let me add more. You can add as many. There are people who own all dividend stocks, especially the ones who are in retirement, the ones who come to our office. They just come just to check their portfolio, how it is with, and just to say hi to staff members. And to challenge us, because you come and tell you these are my stocks, these are dividend abundant, and you feel challenged. That time you also want to invest early, be like them when you retire. So you can own as many stocks as you want. It all depends on the amount you have and what you are looking for. If you are chasing for capital gains, that time target stocks that move in price. If you're targeting for your retirement, a stable retirement where you don't sell shares, money stays there, grows, it will continue growing, but you continue receiving dividend, that's the time you start targeting good stocks. You have them in your portfolio. So why does market depth matter? One, it reveals buying and selling pressure. We'll come to this and see how you identify buying and selling pressure. I did a recorded version, so today let's see it in practice. It also helps you decide where to place your order. You don't want to buy at expensive prices when market can go down. It also indicates potential price movement, whether prices will go down or prices will go up. You can tell that without even relying on media. You can tell whether stock price will go down based on demand and supply on market depth alone. On the app, if you want to go to market depth, you go to watch list, the stock you want to buy, tap it, the next screen is market depth. So a good example, when there is large bid quantities, it means there is strong demand. If you find there is strong bid quantities than supply, there is strong demand. It means the pressure is on buying side. It pushes prices up because sellers are few, so prices will go up. If on the other side, the offer quantity is more with a very huge margin than demand, there is a strong selling pressure. Prices may fall. So how buying pressure show on the bid side? Many buyers placing orders at the same time or rising prices. So you find at one price, there is huge quantity. That's where the pressure is concentrated at that price. And you start realizing now the prices starts to go up. Then large quantities on bids, they always indicate strong demand. Then buyers competing. You find at one point, at lower prices, there was 1,000. Then you find at that price now it is 200, 800 now have moved to another price. It means now buyers are competing for the prices. And with that, they come now start pushing prices up because now they are buying into weak supply. They start clearing the supply side, the offer, depressing those prices go up. How selling pressure show on the offer side? Again, many sellers listing shares at the same or falling price. Again, they also start competing downward the same way. Large quantities on offer side, they always indicate excess supply. And remember, they are clearing the bid side. Price starts to go down. I believe, yeah, now let's go through this. We go now to the market depth. We identify that for a few stocks, then we come and see how to buy at lower prices. So leading quantities to understand demand and supply. So high bid quantities than offer. Again, we have said strong demand. When there is strong demand, prices go up. If high offer quantities than bids, it means strong selling pressure, pushing prices down. And we have balanced quantity, where both sides have equal quantities. And at the top, that's where the pressure is concentrated on both sides. It means that is a stable sideways market price fluctuates within the same level. Let's go back to the platform. We stop this, we go to the platform. And I hope you're running something. Yeah? You can show me on the chat so that I know you're also running something. Let me reset my account. I'm just sharing the screen, but let me see on the chat whether you're running something. As I wait for that, maybe I can pick a few questions from the top. I'm just waiting for my password. Let's see whether it has come in. Hopefully we don't have so many emails going through the platform. There's somebody who says, let me see. Where can I click the screen? Maybe you can confirm. I've not shared yet. I'm just waiting for my PIN to come. I've just reset my account. Just check for the PIN. I just log in, then we continue. And if you have any question, you can put on the chat. Yes, every Wednesdays, NSE. Every Wednesday, NSE. Fridays is international markets. If you want to buy a Nvidia, Google, Alphabet, Coca-Cola, ETFs from international markets like VOO, QQQ, there are SPY, for those who have been buying S&P 500, and many other stocks. Even in international markets, they have good penny stocks, and companies are always listing every day. So you are sure you can get good stocks. I'm just changing my password. Hopefully I've not shared my screen. Let me just log in. So if you want to buy those stocks in the international markets, you can always come to us. AIB, yes, we are offering international markets, but through our trading desk until we integrate with a digital platform. So I think I'm back again. Confirm you can see that screen. As I also check how many more slides. We don't have many slides, so don't drop. I think we have around 2, 3. Then we come to Q&A. Confirm you can see that screen. Okay. So now market depth is that screen you can see. Can I cross? Let me cross this. Cross that. Yes. I'm just removing some screens so that you can only see 3 screens. There is a screen I'm moving. Come to move. That one I'm moving. It's what is called market depth. The one that is replacing the graph. It is split into 2. It has the bluish side bits. Let's see if I can zoom in. Okay. Yes, it can zoom. Just confirm you can see the zoomed screen, the one that I've zoomed. So that is what is called market depth. The one that I've split, bid quantity, bid price. Offer price, offer quantity, splits. Is for upside, as you can see on top. So we have said the bids on the left side are buy orders which have not executed, queued at different prices, waiting for the market to come down. We have 2 orders, the split 2, 57.69 at price of 22.15. What that means, 57.69 is a makeup of 2 orders. You can see that at price of 22.15. Then there are other people who want to buy at 22.10. 190 shares, 9 orders. So 9 is 9 orders. Then below that you have 22 orders at 72,739, the total quantity at 22, now going down. On the upper side, the same thing, 2240, 15,379, 3 orders. So split is the number of orders. You need this. It's only available on online portal. On the app, you only have bid quantity, bid price, offer quantity, and offer price. Now, in terms of pressure, you check where, like now, in this screen on the bid side, you look at the highest next quantity on the bid. Like now, if we start from the top, on the bid quantity, we have 1 at the top, then you have 57.69. That is not that strong. We come to a 90, again, it's not strong, but there is 72.739. That's where bid pressure is concentrated, because that's where much of the orders are in huge quantity. Even if it is one order, it could be 1 million. It means that somebody who is willing to sell all those shares until they are clear. People below that will not get. So that's where the selling pressure. At the top bid, that is the highest bid, is just 1 share at 22.20. So the strongest bid in this case is where pressure is at price of 22.778 shares. Now on the supply side, again, the lowest offer is at 22.40, 15.379. So if you check on the quantity, offer quantity, you realize selling pressure or the highest offer quantity is at the top. What does that tell you? For ABSA, supply is trying to suppress demand. If you're quick enough, you can buy at 22.40, because if you put a buying order, if I was to click buy, I hope that screen can come. Let me zoom out. If I was to put my price at 22.40, I would get the share immediately. But am I buying at lower price? Just check. We have said bid pressure, the buying pressure is 22 shillings for 72.778. If I was to put at 22.40, I'm actually overpaying. Why? There is a likelihood of this price coming down. Check bid quantity at the top, 22.40. You only have one order. It only requires one market order to come and clear. 5,769. Price is 22.15. It only requires 2 or 3 orders to come and clear. 190 shares at 22.10. It only requires 1 or 2, or even a single order to come and clear. But 72,000. So in this case, if I was to buy, I would target a lower price. I'm coming to that in the presentation, but I want to go through this so that when I'm going to do the presentation, you understand. So at least now from market depth, you can identify where buying pressure is, where the huge quantities are. On the selling side, the same thing, where huge quantities are. The next thing you check is the bid splits. How many number of orders are there? If there are more number of orders, remember all those orders have to be cleared for the lower prices to execute. We'll come to that. Let's go to another stock. Maybe this time I can pick Safaricom. We see where the pressure is. Again, look at the bid side. The top quantity is 6,000 at 27. At 24, 62,900. At around, that is 27.70, 62,000, around 63,000. At 27.65, you have 248. This means for Safaricom share, the buying pressure is at the top, not at the bottom. Notice the other prices below 27.60, there are a few shares. But at the top, near the top, that's where buying pressure is. If you look at the offer side, at the top, the lowest is 27.80, 220 shares, 27.85, 6,000. At 27.95, that's where, again, selling pressure is. Then 1 million below it. So it means, again, on the selling side, the pressure is nearly at the bottom, because you realize 1 million where it is, it's sold by 3. So if you are to buy Safaricom, you'd better put your order at 2. To sell at a good price. Instead of selling at 27.80 or 27.75, you better place your order at 27.85, because the orders above that, we are few. If you are to put at the price of 27.95, remember these 384,000 have to be cleared first, which may take a while. I'll come to that when we go to the next slide. If you are buying, however, these are stock, either you would want to take it to 27.80, because the buying pressure is at the top. If you put your price at 27.70, there's already 63,000 shares ahead of you. You have to wait for those to be bought. Would you want to place your order there? You'd better place it 27.75, you wait for the 6,100, and it requires a few orders. These are just 3 orders, split 3 orders. It only takes 2 or 3 orders to come in clear. Remember, I said I will show you how institutional orders are done. Let's take another third stock before we come to institutional orders, so that you understand why this 6,000 should not worry you. If you are buying, if you are selling 99, 7,685, that should not worry you. Because institutional orders, you never see the 1 million. Like now, the 1 million you can see on Safaricom. I can tell you it's a makeup of many orders. You can see it is 18 orders. Those are not institutional orders. Or if there is, I'll explain how they do it. And I hope there is nobody working with a custodian or a fund manager. I hope I'm not exposing you. I hope now you're understanding why some of these videos cannot go somewhere. Let's look at Williamson. This is Williamson. Huh? Notice, again, weak bid. Buying pressure, it's at the bottom and it's very small quantity, but notice the price. Huh? When you're saying it's small quantity, check the price. You only need to multiply and see the total value of both shares to see, is it possible for these orders to execute? Also, on the selling side, notice this is a stock that is balanced. That's why I said these expensive stocks are usually owned by the retirees who are not willing to sell. So there is a balance. These are shares that is balanced in terms of selling and buying power. Let's go to BAT. No, I said BAT is a stock that is also balanced. Notice selling pressure. There is nothing. It's at the top in small quantity. The same thing on the sell side. This is a balanced stock. You don't expect. Notice even in graph, there is not much fluctuation. No? If you look at the graph, notice the graph itself can tell you it is fluctuating, but early in the morning. Yeah? So before you come to institutional trades, let's see the chaos window. Look at that graph in the morning. This price was around 9, fluctuated way up, then started low, then fluctuated up, then after that, stock stabilizes. Let's go to another stock. Let's take our uchumi. Though I don't like using uchumi, it frustrates. Notice, selling pressure at the top, no buy side. Why? The sell side have already dropped. It has dropped down, and I don't know what these people are trying to do, the 2.5 million. Notice the price have not moved. It is stagnates. These are stocks you don't want to get into. So I hope now you have noticed. I just want to pick a stock like Safaricom during the chaos window. If you are buying during the morning hours, you would have been hit by 28, yet the share have already gone to lower prices. We'll come to this chaos window next time. Let me show you how institutional trades do. In your screen, you have quantity. For them, they have disclosed quantity. So in their quantity, they can put 10 million here, even 50 million, or let's say they can put even 70 million. But in the disclosed quantity, they always have another field, disclosed quantity. What do you want to show the market? Yes, the order is 70 million, but what do you want to show the market? They can put 1,000. So you on this screen, for market depth, you see a 1,000 or 4,000. But behind that order, there is a very huge quantity. That's why I said you always need to know who is buying that day. Is it foreigners, or so that you know, is this price likely to go down? You see, like Safaricom is a bit quiet. The reason is there are so many other orders behind which you can't see, which are still executing slowly and by slowly. And some of these are institutionals and foreigners. Most of them, they wait for the market. That's why some stocks you see the prices fluctuating quickly because they have not placed the orders. They place and they see. They can decide, let me first take like this 384. They place their buy order immediately, pick the shares. So if you see a stock that is fluctuating in price, that's a stock you can wait for lower prices. If you see it is stable, it's not moving a lot, then you use GTD, good till date. Let's go back to the presentation. We quickly go through how to identify cheap prices. Then we come and try to play with it. Play with the system. We see how now to do the orders. Because that is the most important. We have moved from DCA, what it is, how you use market depth to identify selling and buying pressure, and identify lower prices. Let's see now how you can get those actual prices. And what we do here is now the opposite. If you are selling, if you have to sell at high prices, then how do you identify it? So how to use bid, offer, and quantities to choose your price. That is the most important. Confirm you can see that screen. Pascaline, just confirm. Is it on market depth? Pascaline, you can confirm what you want me to repeat. Maybe I can repeat before I move. Well, you can post, then I will come back to it. Because I'm also going back to the market depth. It's the one we are selecting cheap prices using strong demand and strong supply. So I'll come to that. And for those who have been buying, this is the right time now to make decisions. Whether you want to be buying shares quickly, remember you pay more, or you want to put lower prices, the same way our dealers do. For those who are managed by agents and by wealth managers, in-house wealth managers, they know once you tell them buy me shares, they can look for these signals and buy at lower prices. Now these I'm bringing now to you. You can make those decisions. You try now to play the same games they play and take advantage of the market. So when placing the orders, you place on strong bid levels where there is strong buying pressure. You check the quantity. If it is still small quantity, you can put within that price, or you put at a higher price than that. I'm coming to that. Let me first go through this quickly. So you look at large bid quantities, which show you demand. So if you see the price where there is a lot of shares on bid side, you want to place your order just slightly above it, and you give it GTD. Because supply, there is a likelihood it will come and clear the top prices, then you'll be the next before they come, the big orders. Remember, as I said, there are market orders which still come in. There is you and me who can see the prices. We want to sell immediately, so we are hitting at the current bid, lowering the prices. So this helps you avoiding chasing small offers in the low quantity. You put your prices, your orders at lower prices. So then how do you avoid buying at the top? When you go to the platform, don't just quickly go to market depth and decide I want to buy, unless you want to buy immediately. Unless you want to buy immediately, that's when you pick the price and submit. Avoid market orders in a fast-moving market. Market orders, as you'll see in the system, is why you're saying just go and pick me any price. So it goes and matches the current offer price. So you're buying high. This you can only do when it is a stable market where bids and supply offer quantities, the concentration is at the top. The buying and selling pressure is at the top. Like the shares we have seen, they are quiet. The BATs and Williamson, those ones you can do market and pick because prices will not fluctuate a lot. For the other stocks, since you can see the prices, avoid market orders. Market orders, only use them when you want to quickly get the shares before prices move up. In a fast-moving market where prices are going up and you want to pick shares that day, that time you can use market, go in quickly, or you match the price on the offer side before prices move up. If it is a falling market, then avoid market orders. Let sellers come to you. They can see where you have placed the order. Even on the market depth, we are seeing the orders. They can let them come for you at your existing bid level. And that's where GTD orders come in. We are coming to that. Then how do you let the market come for your price? One, use a limit order. So limit order is where you put quantity and price. As long as you are putting price 10 shillings 20, that is a limit order. You have limited yourself to that price. It doesn't guarantee you instant buy unless you're matching the offer side. But then when prices come down, you get executed. So you set your price slightly below at the heavy offer levels. We have seen where the offers are the lowest. So you are targeting either the prices on the opposite bid side, lower, or in between the spread. I'm coming to that. Then you be patient. Once you place the order, give it a few days, leave it there. You go on with your work. If you have noticed the market is coming down, just go on with your work. You just get executed. So most trade prices always retract to bid side. So if suppliers notice the bids are at the bottom, then they will try to push the prices. They'll come and clear whatever is at the top. They try to make sure they sell before prices go down. Then, as somebody is buying, if you realize there's a very huge quantity at the bottom, then disappears. We said in the previous tutorial, somebody is trying to spoof the market to push the prices down. It works for you. So when you see those prices, don't worry, if they disappear. Now that's when you have made the order downward. I'm coming to that. Then go to till date, so that now we go to the fact flow. When you're placing the order, we have said you put limit, quantity and price. Then where it says validity, you change from day, because day is just valid for that day, you put GTD, good till date. So your order, either buy or sell, will remain active until that day you have put there. Either in between, the price goes way above 10%, it gets cancelled by the system automatically, or you come and amend or cancel, or it executes or it expires on the date. Those are the only things that happen to that order. When prices come to your level, the order will just execute immediately. So you don't need to keep on watching the market daily, unless it is a falling market where you need to come the following day. If market is still going down, you amend your order downward. So how GTD helps you? You are setting a buy order below current market price. So you are sure when it executes, you bought below the current market prices. You bought at a discount. Market volatility triggers execution when prices dips. So if it is a volatile stock, like Safaricom, where it keeps on, at one time it will execute high, time low, you might get executed. Then it removes emotional. You are not panicking. Then amending the prices. When you see now the prices are going down, you don't want to still buy it. Yes, the lower price, but remember it is still high because market is still going down. You can amend. You can always amend an order that is not executed, a pending order or a partially executed. You can amend to even a lower price and wait there. But don't continue like that amending. At one point, the market may go back, then you lose that opportunity. Just only amend once, wait, then buy. Remember, when you amend downwards, quantity also goes up. You need to increase quantity because the costs have gone down, and that improves your average cost. For us, we are trying to average our cost as much as we can downward. You can cancel the order. Then when you realize the market has stabilized, you can come back again and buy the same stock. Then you can always place multiple orders. This happens it happens in international markets. That's why you have international markets. You can place maybe NVIDIA at $150, then another order at 149.9, another order at 148.8. Market, when it fluctuates within all those prices, you buy at different lower prices. The same thing you can do at NSE. You layer your GTD orders. You put one at 20, the other one at 19, and the other one at 18. Leave them there. You just go with your work. 20 executes. Market keeps on fluctuating. Comes to 18, executes. You see, you are still buying at lower prices. And you could have partial fills, especially during those seasons. And it is good for you because it is pushing costs down. And you're not chasing prices. Before you come to dividend stocks, let's go now to the practicals. And I hope this is what now most of us have been waiting. Then the rest of slides, they are just a few, which we go quickly, then we come to Q&A. Let me just log in. Yes, I have PDF for the notes. All these will be shared. Let me finish this practical, then I share. Let me see whether people have dropped. I don't want you to drop before I share. Let me lower this hard, I see. Okay, I will share. Let me just go through this practical, then I share the link where I'll share those notes and videos. All of them will be shared. And you are free to always rehearse them. So we have said when you're buying, you want to buy at the lowest prices as possible. Let's start with ABSA. It's just confirm you can see the screen for platform. You can see the screen for the platform. Online portal. Just confirm it's what you can see. Okay. So right now for ABSA, if I was to buy, I have three options. Either I put at 22.35, there is already supply, they offer 39.89. If I want 100, that quantity can serve me. But then look at the bid side. Where is the bid pressure or buying pressure concentrated? It's a price of 22. That's where there is a huge quantity, 72,000. The rest above it, there are small quantities which can be cleared either within today or within the week. If you go to the graph, let's go to the graph. We got 1 month. Notice ABSA have been going down. So most likely this price can even go below 22, even if it's not now. If you go to 3 months, it has been fluctuating. The lowest it has been is 20. So if you compare that with the current prices, so we only have between 22 and 22.35. There is a difference of 35 cents. That's a price that can be achieved. So if you got 1 day, it's fluctuating. Even today, it had gone to 22. Remember in the chaos window, which we talk about, between 9:30 and 9:55. There's somebody who bought at a lower price. And they used the same strategy. Yesterday, you place a GTD order of 22 and you leave it. So let's come to our market depth. So if you look at ABSA, on the selling side, there is high supply. If you look at the quantities, if you compare that with the bid at the top, the quantities are a bit low. So that tells you there is selling pressure at the top and buying pressure is at the bottom around a price of 22. So if I want the ABSA immediately, I can take with 22.35. But remember, I said I'm overpaying. If I put at 22.25, still again, there is a lower quantity of 5,000 below that 22.15. There is still chances because these are just 3 orders. I can still get maybe within this week, the prices go down, continue going down. Again, below 22.15. Why would I want to buy that? Yet at 22.10, there is just 180 shares, 9 orders, which can be cleared by just a single order. Ideally, from 22.25 to 22.10, even a single order of 10,000 shares can clear everything. So why would I want you at highest price? So I would choose a price higher than the strongest bid. We say the strongest bid is where there is high quantity on the bid side from the top. The next high quantity. If you look, it's 72. That is the highest, the high quantity. Above, if you are to just think it this way, can this quantity be filled within the week? 72,000 can take a week. So I don't want to be there. So I can put my order at 22.10, or I can decide between 22.10 and 22, there's a difference of 0.1. If you notice, 22 minus 22.10 minus 22, there is a 10 cent. If you are to divide that, there is still 22.05. So I have from that price 22.05 all the way to 22.35, where I can place my order. So I will come to the buy screen. I want to buy raw, maximize on my cost. So the next thing I will do, ABSA, let me minimize this. I will leave instrument type as it is normal. ABSA is the security. Quantity, let's say I just need 1,000. We said I'm not using market because market will peak immediately at 22.35. Because you're telling the system, if I put this way, I'm telling it to go and peak quickly. It will peak at 22.35 because that's where the surprise. Market to limit, I'm telling the system, go and pick the highest offer. But if you can't, you don't cancel my order, convert it to that same price. So if you go and pick 22.35, if I'm not able to fill my 1,000, let's say I have to put 10,000, I'll pick the 3,000. The balance of around 6,100 will be queued back at 22.35. I'm still buying at high price. But if I put at limit and I say here, I just need at a price of 22.05. Let me just put, I may make a mistake and maybe comes an order that clears 1,000, that is around 22,000. My account can handle because it's a test account. Again, we have said you don't want it to put for just a day. Validity, you change it to GTV. So day is only valid for this, just to this trading session for today. If it is GTD, I can select date. I can put it for 1 week. So I'm telling the system, place my order, let it remain at that price, same quantity for 1 week. Then IOC, remember it doesn't have date, it goes immediate or cancel. So go immediately and pick one share at 22.05. If you are not able to buy, cancel. Remember the price is at 22.35. So it won't pick, it will be cancelled. There is fill or kill. Fill or kill means just go and fill my order. If it is one share, just pick one share. Don't let's say 1,000. 1,000 is the easiest. Just go and pick the 1,000 as it is. Just go and pick full 1,000. If you are not able to fill the 1,000, don't execute that trade. So it will be queued at 22.05. When prices come down and the quantity is 1,000, my order will execute. If it is less than 1,000, then that order will not execute because I have said fill the whole quantity. Or if you're not able to fill, cancel. There are people who do that just to get the exact number of shares. So I'll use GTD, place 1. Then I click buy. You know the trading modes, these will come next week. So you leave it, delivery, don't put intraday. Then you click buy. It gives you a summary of the charges. Net consideration is what you pay. You make sure the account has those funds. Let me lower the quantity because the may risk then market executes. So I have that to pay. Then I click confirm my buy order. It is placed. Make sure you have seen that order successfully placed. If I click OK, at 22.05, notice now there is my order there. The one share that I've put. It have replaced the big order that was previously there. And it is signals what to the people on the supply side. I said there is a way you can play with the market. Let me first confirm something. Oh, I might be exposing myself to the market. Okay, I've seen there is nobody from the market. You see, I've hidden the 74,000. What has happened? Supply thinks there is a weak demand. They'll start chasing these prices down, and with that, I can execute my trade. This is not market manipulation, but this is how you play with the market. See, I've hidden the 72. Supply, they think there is no demand. They continue chasing these prices, and I buy at a discount. Let's go to the order status. I refresh. My order is there. I can come and I edit. It has modified. I click modify. That is the order. If prices still continue down, I can amend this to 22 shillings. Let's see what happens if I put it 22. I'm not doing that. The reason why I've lowered my quantity, if I was to do this, NSE would notice my account is moving the market. You see 72 have come back. Let me look. I hope there is nobody in this. Hopefully there's nobody in the market, but that's a way you can play. 672 is back. And I'm not on test environment. We are in the open market. Now, if I am head back to one, I hope, I'm not sure, but it is just a small order, and I see can't. They have a lot of orders to follow through. Orders placed successfully. Let's see what happens. Again, I've hidden the 74. Now, supply, you think, how do you unhide hidden orders? You're not hiding. What happens? If you look at that screen, I've pushed the price of 22 down. If you go on the app, you click more, you still see the 74 on the app. On the portal, you can't see. So the people who are trading on the portal will think there is no demand. Even on the app, unless you click more, you won't know there is another order below that. So supply thinks there is no demand. They will start pushing the prices down. And with that, my order hits at a lower price. I've saved how much? Around 30 cents per share. That's a lot if I'm buying like huge shares. And I've not done market manipulation. Let's see whether I'm on the test environment. You know, I could be playing with your mind. Let's change this to 22.35, and I just execute. I'm hitting that. Notice 34.08. It should go to 34.07. I'm buying, execute. Order placed successfully. I've already executed. Let's confirm on my notifications here. Order confirmation, trade confirmation. I've already executed. I wanted you to know that I'm not buying, I'm not using, it has not loaded on portfolio valuation. It takes a few minutes. Maybe by the time I'm finishing, it should have reflected the buy trade. It is being validated, but I've just bought APSA. So good people, I hope now you have seen how you can play with the market. And I want to repeat again, I've not done market manipulation. See, they are the ones who have given me that leeway between those prices. I've pushed down that 78, open the market for the buyers. And if we look at the platform, if you go to APSA again, our 78 should be back. I believe so. Yeah, our 70 is back. The reason why I wrote my quantity, if it was 1,000, NSE would have realized I'm playing with that account. And AIB would have to explain, but remember I'm in training and just organize this training. For the huge quantities, don't play around with that. And that's how spoofing happens. I think I've talked about this many times. If you are selling, if you see a quantity have been pushed, because I have identified there is a gap, have been pushed down. That's somebody trying to tell you, start selling at lower prices. We want to buy it lower prices, even on sell side. That's how market is played. And that's why AIB gave you this platform so that you can see all these things. Let me first share. I want to share the link to my YouTube channel so that for those who want to drop, because that's where I post this video. You notice this is not a video I can post on AIB. Even AIB themselves, they feel like what is happening with Peter these days. Sharing that link. So that's where we share the videos. Let me also share the link to the WhatsApp group, WhatsApp community, where you can find the links to my Discord channel. I'll be sharing all that. Let me just pick that. I want this copy link. Yeah, I've copied the right link. For now, first share those two. Let me put this. You just join that community. It's a WhatsApp group, but a community where your number is not exposed to anyone. Huh? Other people can't see your number. It's not a group. Huh? I usually don't like groups where I'm exposing clients' numbers. Huh? So you can join that. Then within that, I'll share the link to the other social media platforms. Huh? And always feel free to reach out to me. WhatsApp number. Let me share this for those who want to drop. Huh? So that's my WhatsApp number. Feel free to reach out. Let me confirm whether we are still on the portal. I want to see whether my apps are loaded. I've shared on the chat. You can see it. I've shared on the chat. If you go to the chat, you still see it. It is there. So you have seen my apps have already loaded at the top, the one that I've bought. And notice the average cost, average price. I've seen in the client's complaint that the price that is shown is not what they bought it. As I said, the average price includes costs. Notice it has added the levies and commissions. Then the reason why it is high, there is 2 Kenya shillings for stamp duty. That's what makes my costs high. So if you're buying small shares, always factor that. That's why my rolls have projected with 2 shillings because of that stamp duty. If you go to statement today, it will give me the exact price. 235. Price 22.35. When you go to portfolio, average price 24.50 because average cost, average price includes cost. So the next time I'm buying ABSA, I would aim at lowering this cost. Let's see if there is a share we can buy cheap. Cables is suspended. Engine. My average price is 10. What about equity? Equity 61. Let me see if we can average engine down. And confirm you're still seeing the platform. Why are you not able to join? I'm not sure why you're not able to join. Okay, just stick around. I will share the other links. The other additional links you can join. You can see the platform. I want us now to do DCA for my engine. I want us to do DCA for engine. My portfolio valuation, I have to eat a share. Average cost, that is the cost I've incurred, 1047. Current price, 910. That's my market value. My loss is 383. I want us to push this down. Let's go to the platform and notice the average cost is 1047. So we go to Kengen. Kengen, where is it? It is here. The current price is 910. If I wasn't doing it for this training, I would put a GTD order. The next strongest bid is at 3,000, then 10,000. 3,000 is 7 orders because that's 7 orders. So there's a likelihood those 7 orders by tomorrow, they might not come back. Or maybe 1 order. So I can't place on that. At 10,000, that's 1 order. So I don't want to risk. I would put at 9. Or if you notice there's a difference, 9 and 892. There's a difference of around, is it 0.8? So I can play around with it. I can put my order at 891 if the platform allows, or 894. So I want to buy it immediately at 910. Let's see if we can push that cost a bit down. So I want to buy 100 shares at 910, which I can place at market to limit. It's 100. Well, let's put 200 or 150 so that we see. Okay, there is a lot of shares. I will still buy. I wanted to show you how market to limit works, but let me just put 100. Limit, there is nothing else I can change. If I put market to limit, submit, executes, order placed successfully, and I hope it has executed. Oh, did I execute 10,000? Oh, it's 100. So it's already executed trade confirmation. Let's give it a few minutes. Absa. I just want to say I had 280, 1047. Give it 2 more minutes. It should lower my cost down because I've bought at a lower price than average price. Again, few shares, 100. So it should go to 380. Then my average price should go to around 1020 or 1030. It doesn't take time. As that happens, maybe I can see if I can pick a few questions. Let me see. And there is a lot to learn. Next week, there is a lot. We have seen spoofing. That's one thing I don't like about the market, especially for those who knows the market. Let's see a good counter which I can show you how to play with it. And please don't play with some of these stocks. Like BAT is a stable stock. That one you can't play around with it. Preterm, again, that's a stable. Kain General, these are stable stocks. DTK, still again. Safaricom, where is it? Or KCB. That's Capchoro, those are stable stocks. KCB, unfortunately, these, if you look at the KCB, buying pressure is at the top, the 100,000, just one order. Then there is a bit of selling, and you can notice there is 526. If I wanted to push the prices up with the seller, I would just need to put it 62.80, just one single order. I will hide the 500,000. People will think supply is diminishing. So they'll start pushing the prices up. That way you can hit at a higher price. That's how you can play with the market. But remember, only when the market is rising. Now, for KCB, the 100,000 would not worry me a lot if this makeup is just the way it is. Because tomorrow this order may not come in. So I can play around with the next. That is around 17,000. So I can decide to put either in between 61.50 and 61 and place my order there, or place even lower than that. For 17,000, it's something that can be cleared. So that's how you play the market. As we continue, you run a lot. Notice the Kengen, I've lowered my cost to 1013. It was 1047. You notice here. So my cost is still going down. My losses are still reducing. If I place another one, I can still push these prices down. So now that if I put 1,000, let me see this debt, whether it's possible to pay. It's around 5,000. And that's a lot. I think it might raise issues. I would have put like 1,000 shares. So the next time I'm loading, I will wait for the shares to go down. I'll put it around 7. If it goes to 7 or 8, I still hope it can go so that I push my costs to below 9 or 8. Now I'll be in profit. Remember, right now as we talk, I'm in a loss. If I don't buy more shares and push that cost down, let's say Kengen moves to around, it's trading around, because with this it can go to around 858. If I put like 1,000 shares at 8 and it goes through, let's go to portfolio valuation. For my Kengen, I can lower this 1013 to around 914. I've already reduced my loss. The next minute this share goes up, I'll be in a profit. I hope now you understand how DCA works. I hope you have understood what DCA and how it works. If you have not understood, reach out on my WhatsApp. You can call me between 7 a.m. I usually sleep at around 10. You can always call. I always have time. I always have time, even after office. You can always call. Let's discuss the market. You understand it. There are things I can't say here because 181. I'm not sure who is here. So some things today I was quick to get in. I didn't check. I usually check so that I give you this. And now you understand why this is coming in a different channel. What it will be. Because these are things you not see in the market. Now for DCA, GTD, we have seen using market depth, checking buying pressure and selling pressure, leading quantities, selecting lower prices, rolling. We have seen I've done my DCA on my own Kenyan. We have seen GTD. I actually place a GTD order for Kenyan to lower that cost so that the next minute it goes to 950. I'm in profit position. Huh? Sio kifunga macho. Somebody is saying it is kifunga macho. I just executed a trade on the platform and we confirmed it is from NSE. It is a real account. We have seen how to have made the trade and now we are in the dividend. What happens now with my Kenyan? I've increased my shareholding to 380, lowered my cost. So when the Kenyan goes above that price, I'm in profit. Kenyan is also a dividend stock. I've increased my dividends. So if I buy at 8 shillings with, let's say, 1,000 shillings, I can buy more shares than I would buy currently. So I'm also increasing number of shares, lowering my cost, so increasing my profitability and also my dividend. Next week, and also I'll do a few videos before then, how then you increase dividends. So we come to dividend stocks. These are stocks that purely pay dividends. Any stock that pays you dividend, even if it is a small dividend, that's a dividend stock because it is paying you dividend. The only difference is the strength of that dividend. There are those that give high amounts, but again, prices could be high, so you could afford lower few shares. There are those that give small dividend, prices are low, you could afford more shares. It all depends on the number of shares you can buy with the amount. And as I said, if you are able to invest in NSE, try and have as many stocks as you can that are paying dividend. You are not limited. You can have Safari. You have seen my portfolio. It has many stocks. It's only one mistake I made, and I was training on how companies are suspended. Cable. Let me go to. I hope I've not closed. I've not closed. Let me go to cable. So that those who are playing with Uchumi, they understand what they are doing. I hope I've shared the screen for platform. Just confirm it is platform. I don't want anyone to ever be involved with a stock they can't sell. Just confirm you can see the platform. You see where they see ABL, that is cable. I bought it some time back. That day, Equity Bank and cable, they had that court case they had. It was announced at night. Apparently, I saw the news. During training, I intentionally told the client, we can place the order. This share will be suspended. What will happen to my share? Immediately I placed the order, it was suspended. I tried to sell because it was intraday. I couldn't sell. If you go to the screen, you look for cable. It is here. It is 00. It is suspended. Let's even try to buy. It doesn't even. It has a price. Let's buy one share at market. Submit. Confirm. Order placed successfully. Let's see. It is submitted, but then when I refresh here, I can't amend or cancel. What does that mean? If you got a notification, it will be suspended. It is rejected. Let me even zoom this. This is what you get. Those who are playing with Uchumi, you submit, you're trying to sell, this is what you get. Order is rejected with order number. This instrument halted or suspended, and there is nothing you can do. You just bought Uchumi, it is suspended, you are trying to sell because it has been suspended. The message you get. That's why I feel pain when I see social media people telling you to buy a stock that they know will be suspended, and that is the message you get. So don't want anybody to get that message. Don't play with those stocks which can be suspended. Buy quality stocks that give you dividends. So how dividend works? Company makes profit, real profits, supported by either free cash flow. I've done all these videos, or the cash that is coming from the previous year, because it is being paid from cash. If dividend is paid from dividend debts, you always see from free cash flow. Company will be left with the negative. You need to be careful with some of those companies which pay from debts. So when they make profits, they pay you that profit directly without you selling shares. And it is paid per share held. That's why DCA ties with dividends. The more number of shares you buy, the higher the dividend. So the lower the price you buy at, the more the number of shares, the higher the dividend. And payment is paid independent of daily price movement. So you'll be paid and shares will still be moving. So why dividend pay you to be patient? One, you are just earning cash waiting for price recovery. So you are continuing buying at lower prices. You have bought, company is paying you dividend. As we wait for this price recovery, portfolio goes in profit, you sell at profit, you take profit. Remember, you are here to make money two ways: buy low, sell high, or through dividend. So income continues. Even when market are falling down, you still be getting dividend. 2024, companies were still paying dividend. 2025, when market have gone up, companies are still paying dividend. Next year, they will still be paying dividend. It will continue until either that company de-risks or you are bought out. And when you are bought out, if it is a stable company, you'll be paid at the current price or at higher price. Or that time when NSE is closed. Only when NSE is closed and CDSE is suspended, because NSE, if they close, CDSE is suspended, CME is suspended, and that means there is no market. Can that happen? No. So shares will be there for eternity, which you can pass over to children. They continue accumulating this income. Imagine in your retirement, you're earning from your stocks in a year, maybe dividend was 2 million. You are passing that to your children. Just divide it with your children. They have not worked, they're just getting each. You have shared those shares equally. Go to equity, equal number of shares, equal for each stock. Those are your children who are not hustling like us. They are coming to look for jobs. They are earning from your hard work currently. So that's how you look at the market. Don't look at the prices, don't look at the returns, because it will bribe you to look at the future. Look at the future. Look at who you are working for. How do you want them to pass that 1 million to them? They continue enjoying. They will be getting free money, and you tell them now continue adding, and that's how you see most of the investors become richer. Most of the companies, because they pass that wealth to their children, and they usually train their children early enough so that when they are passing, they do not waste. Then you reduce pressure to sell during downturns. Then, very important, as I've said in previous videos, reinvest dividend to grow income. This free money you have been paid. When you can work and get extra revenue to pay your bills, this dividend reinvest. Because in your retirement, you will not have time to watch the market. That time you want to be stable. When dividend comes, that's when you're asking the children, what share do I continue buying? They're the ones now advising you, then you continue adding. This time, try to reinvest that money back. Buy more shares. Increase your total share count over time. That increases dividends and also capital gains. What does this lead to? Future dividend payments higher than you have ever expected. So why long-term investors focus on dividends? It's predictable cash flow. When a company announces we are giving dividend 10 shillings per share, you already know I'm being paid 10 shillings per share, multiplied by the number of shares. Return that, buy more shares, start compounding. This dividend you have bought is bringing in another new dividend next year. Return it back. You are using dividend now to increase your future dividends. Then strong alignment with the DCA. We said we are worried our cost. When you are using this free cash to buy, remember there is no cost to you. That's why I said I'm doing a video on stockanalysis.com where now you can even start tracking dividends and how they affect your average cost. Like now, the people who have already been receiving dividend, you should not be even looking for the losses in the share. Just factor that dividend in. You notice now you're in profit position. Huh? Then build sustainable wealth over time, because now in retirement, free money coming in. Huh? Then we come to the pain of the market, which is called penny stocks. Huh? It is a painful stocks you can buy. These penny stocks, they're all priced stocks below 10 shillings. They have made people lose money in this market. Huh? I would advise if you have to buy. I hope in the platform I'll be able to see them. Yeah, we'll come to them because I'm just finishing this when we come to Q&A. Penny stocks are, first of all, lowly priced shares, below 10 shillings. Anything above 10, that's a good stock based on NSE. In international markets, it could be different. But in that international market, it could be a new listed company. So that's why in international market, it's different. And there are platforms to value that. I'll be doing that every Friday. For NSE, penny stocks is anything below 10 shillings. As long as it's not done, it's not a company that have just listed. They have weak fundamentals. So the price is synonymous with their performance. Take Uchumi. What is left for them to do apart from China Square? Right now, in January, I know they will announce another small profit because of December. Then after December, what happens? Again, they will have to wait until another December. That time, remember, that store is still paying employees. The same rentals are paying employees of Uchumi supermarket because that's what they'll be using now to pay their salaries. Again, do you still want to buy such stocks? Look at KQ. It's in loss, but KQ cannot be delisted because it have a government hard. That's why it is still trading. If you look at other stocks which are trading below, apart from Kenyari and CIC, and those it's because they're in insurance sector. I think in insurance sector it's only Jubilee, which is a strong share. And remember Jubilee, they have their wealth management wing, which supports them. Huh? And the insurance, I think it's global, so they're making money. That's why they give high dividends. But Kenyari, CIC, they have so many claims. That's why most of stocks within insurance sector, they are not that good because their performance they are affected by claims from insurance. It eats into their profit. So apart from Kenyari and CIC, the rest, and CIC it's because they also have CIC asset management wing, fund management. So that is giving them money. The others, I think, even if they have those asset management wings and also fund management, well, they could be having high claims, especially those insurance that offer PSV vehicles and also lorries and bus. You expect them because that's where most of claims come from, and they are huge claims. For the personal vehicles, if you find an insurance that is giving insurance to vehicles and not medical, because medical, remember, that's where now people also take advantage. On personal vehicles, those ones, they are good for personal vehicles. I've not seen those crazy and those ungenuine claims. Those are the ones that affect some of those companies. So it's only Kenyari, CIC. The rest, try and avoid that. as much as you can, because the only way you can make money is selling high. When will those shares make you profit? You lock your money for a long duration. Stocks which are high, just leave them. Huh? And often these stocks, you find they have low liquidity and poor governance. Look at Uchumi. Right now, there is no demand, meaning there is no liquidity. You can't sell easily. The last week, it was buying, demand blocking supply. Again, suppliers are telling you not, supplier telling you not sell to you until we reach a certain price. Then demand realized here we are being taken for a ride. That's not buy. Then prices started going down. Now it's both. Right now it is suppliers who are begging us to buy. At one point now it will stagnate. Now those who think they can buy now at 0 point, they will start buying back. Let me give you a story as I come to conclusion, because this is just a quick one. There's a friend of mine who bought umeme at around below 10 bob. A long time ago, he got, now on Book Russia, he compared between selling umeme and taking dividend. He realized, if I take dividend, I will only take 500,000. If I sell in the market, I'll get 1.5. He decided to sell on Book Russia. He forfeits dividend, he sells the shares. These are some strategies you can use. On Book Russia, compare your portfolio valuation, the profit, against the dividend. If profit is higher, sell, buy the following day. When prices go down, you buy back. For him is what he did, but he forgot to check what umeme does. So he sold 1.5. Immediately the following day, he bought at around, when it went to around, was it around 18, 15 there? He bought. And we asked him, why are you buying back umeme? They have said they are not going ahead with their projects. It's a government of Uganda have already taken up power distribution. They no longer have any other work to do. He said it will go back to 26 and make another. Remember, you have put back 1.5. Right now, he's asking, how do I sell? He's in the process of now losing even his initial principal, because umeme, the next thing, it will go below 6. If there is nothing major that comes out. Remember, they have a court case. Huh? Uganda is not like Kenya. The government changes and eliminates, they are affected forever. Now he rules. So when you are investing your money, always check where you're taking back. If it is Uchumi, you bought high, you sold at a profit, it goes back to 0.1. I know there's somebody who try to push you, buy at 0.1 again, it will never go back. It will be suspended with your money. What will you do? Move that gains you have made to another good stock and forget about penny stocks. It was your chance to make money. You never get that chance again. You might lock yourself. Why? Because DCA feels on penny stocks. For penny stocks, price can keep falling down, but it will never recover again. For Uchumi, we are just hoping for the best. They don't get suspended or delisted. For those who have already bought, you have a chance to still stick with that stock forever until it recovers. And when it recovers, sell quickly, or you accept the losses. Raise a GTD order with the current price. Remember, as I said, chaos we do. Uchumi only trades in the morning during chaos we do. After that, you are stuck. It is at the mercy of the buying side. Please that order at GTD. Get your price, get out and forget they ever existed Uchumi. Recover that loss with a dividend stock. It may take some time, 2-3 years to recover that loss, but once it recovers, penny stocks never go there. Again, penny stocks, apart from Kenya DCA, the rest don't give dividends, so it can't compensate you for the loss of waiting. Averaging down, yes, you can average down penny stocks by buying cheap, but it's already exposed you to losses, because in future you still save at a loss. Yes, you're buying when it goes down, you're averaging your cost down, but then it will still fall down at around 0.3, 0.1. You still sell at a loss, so avoid penny stocks. And for those who are encouraging others to buy penny stocks, let's always be good and advocates for NSE, let's tell them they stop that on social media. It's not good. It's doing harm for new people because when they come in, they think these are cheap stocks. They are not cheap. Let's always guide others. Penny stocks trap your capital. When you put money there, money is stuck forever. There is no recovery. Money gets stuck with no people to buy your stocks. Suspension, I hope that doesn't happen because there is no warnings. Delisting, it will be said, but at a loss. Unfortunately, that's what there is. For Uchumi, suspension will happen overnight or even during trading day. Delisting, you'll be told, but remember, there are creditors to be paid. Look at their balance sheet. Shareholding equity is on which side? Is on assets side. Meaning what? You and the assets will be sold to pay creditors. You, I mean your shares. Shareholding equity on balance sheet is your shareholders, your shares. You see portfolio valuation, what is there? Because it's valued every day. It's that. The only thing you can hope is prices to improve. Shareholding equity becomes like a positive kidogo, which can pay you a small amount. That's the downside of penny stocks. So when you're buying, always look at balance sheet. And you don't need to be an accounting. I've said, go and look where shareholding equity or shareholders equity, shareholding equity, or equities is in the balance sheet. If it is on liability side, that's a good company because it means assets can even pay you as a shareholders in case of liquidation. If they are in the assets, they are being added together with assets. It means you and assets in your shareholders can be sold, pay the debts. So that is the risk of those penny stocks we are playing with. How beginners will lose money? You're attracted by cheap prices, not the value. You chase hype, rumors in social media, and using DCA incorrectly on weak companies. Then again, what you see on social media, just treat it with the pain you should treating it. There are people who are small news. You just want to put it to excite the market. Market can only be excited by the mass, not two people. Two people cannot move the market. 3 people cannot. 10 can move, but CMA, they can tell the pattern. Who is trading this share? Like Uchumi. If you're buying, selling, buy, selling, buy, selling, it is the same people who are buying, selling. You actually make the share being suspended with your stock you have bought. NSE can tell who is buying. They can tell with your CTSC number. Brokers can tell. CMA, NSE, they have their surveillance team. CMA, they have their surveillance team. Brokers have their risk and compliance team. Immediately that is done, your account will be suspended. That share will be suspended. Then you lose money. So that's why you need to be very careful. Let's come to the last slide. I think that is exciting the markets, but unfortunately, it could make others lose the investment. Sale of Safaricom by government. It's a quick brief. I think it's only those two slides. I quickly go through it. What does it mean? Government are only selling their own shareholding. I'll come to that. So government plans to reduce its ownership by selling that to Vodacom, who are still shareholders. They come from those shares they are selling. It's from government shareholding, not public shareholding. You know, in the news you have seen it is public shares. No, it's what government owns. I know people would argue, but government is public. In Safaricom shareholding, there is government shares and public shares. That should not confuse the shareholders. There are no new shares which are being issued. Government reducing their shareholding, Vodacom goes up, public means no change. There is no change in Safaricom business operations, management, or profitability. Yes, Vodacom have the higher say, but there is a clause in the sale that says Kenyan public and Kenyan government maintains the top leadership. it remains in Kenya. So CEO will still be a Kenyan. Board will still be a composition of Kenyan and foreigners. But what matters is the CEO. Well, employees are not affected. Impact on price and price, supply and demand. It was expected people would start selling because of panic, which would push prices down. But again, prices have not moved down, and we don't expect that. Then there was misconception that there are new shares again that have dispelled rumors, so nothing will weaken the prices. Long-term value of Safaricom money depends on its performance outside there. They are expanding in Ethiopia and other products. There is no sale. It's not a company which is being sold. It's government shareholding. You are public shareholding. The shares you have in Safaricom are not touched. So think about this way. Ownership in terms of business performance, because now it will be aligned more to Vodacom operations, which is good for the company. It will grow. You start seeing innovation. There is reduced government interference. These price dips you're seeing, it is your opportunity now to do DCA. If you bought at 40, buy now, a very huge quantity. If you bought like 10,000 shares at 40, that was around 400,000. Look for another 400,000, come and buy now. You will reduce that cost down. When it improves, select profit. Then focus on dividend and recovery. What you should do, limit orders, we have seen how to use them in GTD when accumulating. Apply DCA at lower levels. Try to buy it as cheap as possible. You have seen how you can even play with sellers so that they come to your price. Always check if there is a lower quantity, please push that down. Let them come for you. But don't do it frequently because NSE again, I've said we have surveillance team. And please, they have seen people sharing. Yes, share the videos, but don't share to NSE handles. Oh, okay. I hope you won't share. But anyway, I said it is not market manipulation. Avoid panic selling and chasing prices. The ownership before and after. Current ownership, Vodacom owns 40%, government 35%, public owns 25%. These are the shares now you are buying, the 25%. After sale, what will happen? Vodacom will have 55%, government reduces to 35%. Your shares remain unchanged. So I don't see why people are panicking. Safaricom is not being sold. In total, Kenya owns 45%, Vodacom owns 55%. The only difference here is government have no say now in Safaricom. They can't control Safaricom. Key points here, government reduces its stake, reducing government interference. Vodacom increases controlling interest, but remember they can't control the executive. There is a clause to maintain everything in Kenya, including the police. Innovations now start to come in. Vodacom owns Vodafone. They own Vodafone 100%. What does Vodafone do? They are the ones who support Safaricom M-Pesa products. It's that simple. Without Vodafone, M-Pesa will not be there. Public shareholding remains unchanged. The sale at 34 is structured to make it cheap for Vodacom to buy, and that's why price of Safaricom is capped below 30. That is the truth. If it goes above 30, even so Vodacom, they will buy. What will they buy? That's why it's being put around 28, not to make it even cheap for them to negotiate down one, but to look like it is a fair price. And also to you as the investor, they now start telling you that there is a 6 bob, which we are gaining. But ideally, just to make sure this transaction go through. After first quarter of next year, I hope they will have closed the transaction because it has to. Already they have created that fund in infrastructure fund. There is a fund that was created usually by Ministry of Finance. That money after sale, that's why it will be put so that it is not misused. But government is government. Whatever they do with the money, only God knows. But all these are being done to by public interest. But for you as the shareholder, your shareholding is not affected. DCA now, buy cheap. Wait for prices to go up, sell. But remember, Safaricom is a stock that can gain in capital gains, and also they give dividends, good dividends. So best outcome, existing shareholders keep on buying. Then there is reduced government control, which doesn't now disrupt the prices. For now, you might see short-term price pressure, but it can't go above 30, and it won't go below 25. Don't expect it to go below 25 to make sure Vodacom don't negotiate downward, and it can't go above 30, so that Vodacom doesn't feel like they are being shortchanged. Remember, they can't sell to the public. So if it was to decline to 25, government would move it to public. But that cannot happen. Already decision have been made. Let's go to Q&A. I hope you have not dropped. Let me go through quickly. I hope it's not many questions. What time is it? Oh, okay, we are still within time, 15 more minutes. I think with that I can cover Q&A and time for questions. So we start from the top. Meeting recording, I will share. Or yen on shares to acquire loan. Yeah, when you use your shares to take loan, they are put on yen. Yen, it means they are blocked. You can't sell them until you clear loan. Government gives you letter to come in, lift yen. So placing yen, bank will give letter. You bring to broker, they broke. When you clear loan, you bring now letters to lift the yen. Do I get dividends? Still, if shares act as collateral, dividend will come to you. Remember, shareholding doesn't change. It still comes to you. Link to the session. I've shared the link to my WhatsApp group and also YouTube channel. On the YouTube channel, you can get all the other links. On that WhatsApp group, I'll still share all the other. That I share most of our trainings when we discuss. And also Discord channel, where now the discussion is continuing. Maybe I can see if I can pick Discord channel link. So that's for those who still want to join that Discord channel. It is free. Everything is free. So you didn't pay for this training. Huh? If you paid, I would want to know who may have charged you. It is free. All my trainings are free. All materials are available for free. Always reach out. Huh? Even WhatsApp messages, calls, they are free. They are free. They are free. I want to pick that code. And yes. Let me share that for those who may want to join. There you are free to discuss. There is even a group for jokes. If you want jokes, there is that. So we are separating NSE, international market, and other investment products, and also a way to interact. Let's see. Discord channel I've shared. Why are you saying it is politics? Why didn't the government open sale so that they get best price share in the market? The public would have bought at a discount, 25. You know, government is after money. So if they do rights issue, they can only do below 10. They are losing money. There is no other way they can sell that, only through rights issue. Safaricom does the rights issue, but instead of floating more shares, government floats those shares. If they are doing through Vodacom, they go with the valuation of the company, which is they feel it at 34 is a fair price. But remember, the price have to be capped below that price, because if it goes up, then why would Vodacom, why would the government sell to Vodacom when they can sell to the public? If it goes below that, why would Vodacom buy at a higher price when they can buy additional shares in the market? It's just politics to make sure this thing goes through. Once it goes through, then prices go back to where they were. You said BAT is a good company for dividend. How about Kapchorwa Williamson T? We have seen all these stable stocks. Most of the stocks that give dividend from 10 shillings and above, those are very good long-term stock. And don't worry when prices go down. Like Kapchorwa Williamson T, there is a period you see they are reporting losses because that time they are not exporting tea in huge quantity. When they export tea right now, they're in profit. You saw even KTDA, they announced bonuses. That means even Kapchorwa and Williamson, they made profits. Expect a good dividend next year. And if I think the prices have gone down, I hope we won't push prices up again. They might give bonuses. So these are good stocks. Next week, I'll go details of dividend. Today, it's because of time. I didn't want to take much of your time. You have shares in Safaricom Circle. Can I sell them to someone who is not in the circle? For Safaricom Circle, it's not in the market, but you can go through the circle. Actually, you can sell to somebody who is joining in. Just talk to their management. They can source for somebody to buy. That is the shares. Remember, there is in Circle you have shares and deposits. Deposit you can always request. This we are talking about Circle, the way Circle works. For those who don't know, it is Circles, not shares in the market. For Circle, you can approach the management for that Circle, tell them to look for somebody to buy. You can always sell to another person. What they do, somebody is getting in new and they have enough funds to buy shares, they'll just tell you to sell to them. You get your money, they now get the shares and they continue doing the deposits. That's for the circle. Stanchart, yes, it is a good buy. Stanchart is a good buy this time, considering that their profit had dropped a bit from their last financial reports. When they also had a case that they won. I think they won, no? I think they are supposed to pay, and that's why their profit dipped, because the pension they were supposed to pay their employees was not provided for. There was no provision in their financials. That's why it affected their profits. But Stanchart is a global bank. It can never fall down. Prices went down. It is time to DCA. If you bought at high prices, it's also time to buy at cheap prices. Next year, you see them report profits and pay dividends. It's a good company. How do you know if it's local foreigners trading? Where can I get? I've shown you on the online portal. You just scroll to the left, or to the right, on the portal, not on the app. You see the column for foreign buyer and foreign seller, and also turnover. So you only need to compare the turnover against what is on both foreign buy and sell. If foreign buys are higher, then it means it's foreigners who are controlling the market. If it is less, or there are no foreigners buying or selling, then it is purely local. So foreign buy, foreign sell tells you whether foreigners buying, and the difference in the quantity with the turnover tells you who is buying. For those who entered KCB at 70, what is your advice? If prices are going down, for KCB, it's already, the prices are way high. Right now, if you are in profit, you can decide to take some profits, or you hold for long term. For now, those stocks which have already surpassed the prices they were in 2024, I wouldn't advise you to buy. It's better you channel that money to a stock that is still undervalued. Another question. No, From the people who issued Safaricom the green board, I think that I clarified. Difference between preference and ordinary, I think that I cleared. Preference, they are given the first preference when the company is being liquidated. There are people who bought preference shares. You, when you're buying in NSE, you're buying ordinary shares. Apart from KPOC, you see there's KPOC 4 and KPOC 7. Those are preference shares for KPOC, but don't buy those. Those ones you can't sell easily. You never see somebody to sell to. Even buying is a problem. Buy the ordinary shares. Those companies can never go down. I'm trying to sell Uchumi in Qatar. It's already broke. Unfortunately, David, prices are going down. You can only put a GTD at a good price within the prices you can see. Leave it for a week. Hopefully you get in the morning windows, chaos window you can get. That's when shares are trading for Uchumi between 9:30 and 11. After that, when market cools, it broke. So make sure you buy early in the morning. Just put a GTD, give it a week at a good price within what you can see. If you're a long-term investor, can you still use this method of accumulating? Yes, this actually works for long-term investors. Also, short-term, it may work, but for long-term investors, yes. Because you are not targeting to sell, you are targeting to lower cost down, increase number of shares. If for Uchumi, we use GTD order. That may help you. But hopefully something major happens. Please repeat what you said about time to buy or sell during the day. I believe we are talking about the difference between the chaos window, the morning and the afternoon. In the morning, unless you have put a GTD at the lowest price possible, don't place a buy order for market. You may execute at very high prices. That's where GTD low prices come in. Sell side, again, don't put market orders. If you know your order will execute in the morning, put just GTD highest price and always check every morning how the market is behaving. Lower your price again. Between 11 and 3 p.m., that time market is stable. That's the time you can tell whether market will come down or not. That is the best time to place your orders for GTD. Because now you can tell where the market is going. Then the following day in the morning, before orders are between 9 and 9:30, that time there is no execution. Check how the prices are being put. If your current price, the price you put the order is the current price, you can adjust downward and decide, let me take the shares today. Would you request you share notes? Yes, just join that WhatsApp channel. Discord, I'll share on all my platforms. So when you have to place the orders, place before 9:30. Between 9:30 and 11, don't place the orders unless you place at lower prices. That time place limit lower prices. 9 to 9:30, that's when limit orders are submitted. Check the way the orders have been queued. That time you can place order on whatever price you want. Now from 11 to 3 p.m., now you can decide the prices you want to buy at the lowest. That's the time you can make that decision. And remember, even if you put early on the previous day, you can still amend the order. A question, unaweza name for me, index fund stocks. Index fund stocks, index, first of all, tracks group of stocks like NSE 20, NSE 25, S&P 500 for international markets, and S&P, there's also triple Q. So those are index. Now, those index, for them to trade, there is an ETF that is created. So the ETF usually have the stocks that index is tracking. In NSE, we don't have those. We only have two, as I said. Absa Gold ETF, which contains the stocks that are tracked by Absa Gold Index, which is the gold. That is Absa Gold. So Absa Gold ETF tracks the price of the gold. So when you buy Absa Gold in NSE, it's like you're buying gold, which is held, I think it is South Africa by Absa Bank. It's like you're owning that unit of gold, but not direct. If you buy SMWF ETF, it has the index that tracks the stocks that are there. Which are the stocks? The ones that trade in international markets. The global stocks like Nvidia, Google. They are within that. So when you buy SMWF, it's like you're buying each unit of Nvidia in NS. But remember, ETFs don't give dividend in Kenya. The two of them don't give. In international market, they lose that give. So you only gain if price goes up. But SMWF doesn't, price doesn't move together with the index. Just look at the index, the way it is performing. Even if you convert with the current rate, it's not equivalent to the price. Because in Kenya, NSE, it is demand and supply. And most of the cases you find it in speculation. Huh? So in NSE, none. In international markets, they are more. So NSE, you find NSE 20, NSE 25. Those only tells you where the shares are going. Yeah? And we have the new index for bank sector, just to track performance of the stocks. Halafu on the take of EABR cautionary announcement. EABR, is it the, I would need, I have not been in the market. Let me see. EABR cautionary. I have not seen it. If it was done today, I may not have seen it. When was it done? I just want to see when it was done. Oh, 2 hours. Then that's why I have not seen. This is BRO existing Kenya. Then that means somebody will be buying those shares. And I think there is a halting of the BR shares. Halting is not suspension. Halting means you can't buy and sell today until that information is clear. I hope that's clear. Suspension is just for the day. Halting is just stopping it for some time until it is clear. I wish I had seen this before we started. And I think it was done at what time? You see what happens? Suspension was done today. NSE sent that information around 12:01. So the people who bought earlier, if they panicked, then they are trying to sell, they can't sell. That's what will happen with the Uchumi, unfortunately. But this is halting for some time. Maybe it will resume. And they have actually said it will resume tomorrow. What you can do, just join that WhatsApp group. I'll do an analysis on EABR. I had not seen it because I'm offline. If I had seen, we had have actually talked about it before the rest. I hope the rest joined my WhatsApp group. I'll go through it then advise you. But I don't think there could be any major effect unless they're actually doing that sell at NSE, or they know nobody to buy those shares. Maybe they are floating them in the market, because that will lead to oversupply of shares, leading to drop in price of EABR, which is a good opportunity for you. But if it's somebody else who is buying them, it should be good. Is there a way to reinvest dividend instead of receiving? That is by regulation. You are supposed to receive to your bank, but AIB, we are trying to lobby CDSE and registrars to see if they can push it to our side. We credit your trading account. For now, you have to credit back. And as I said, Wednesdays, Fridays, and weekends. And there are times I even be announcing even other days within the week for all the products in capital markets, shares, international markets, money market fund, both treasury and corporate. There is also savings products that are with insurance firms. Most of them they're in capital markets. There is also bank savings, how you can utilize them, and also circles. My channel is to cover everything. How does the general election impact on NSE? Previously, it's because there was rigorous elections, and with the opposition that was there, it's not like the opposition you have now. If they say the economy stop, it is used to stop. That affects company performance. Profits go down, company reduce profitability. Foreigners, they start exiting because they panic. Locals, you want to sell, so that means prices go down. But for you, that is the time to accumulate. Now, going forward, we might see a shift. Though with what we have seen with by-elections, it may signal something not that good unless government takes caution early enough. But I don't see it affecting the market. Just look previously, market used to go down briefly, then it rebounds. It's not like in 2024 finance bill. Should buying a share when there is low demand? You can buy anytime. But remember, for this training, we have seen you can buy at lower prices to DCA. So always target the shares that you're buying, check the demand. If you feel you still need to buy this share, like it's within either come dividend or book closure. Come dividend is when share is trading and dividend is open. That time you want to lock in dividend, that time you can buy at the current price. Any other time, check the prices and demand. The same way you have done. Time to DCA your shares. And if you have bought within the duration prices are high, maybe dividend, come dividend and book closure, the following day try to buy your cost. EABR cautionary, I've said, I'll come to it. I've just seen it. Wednesday, same time, 11. Mostly today it's because I realized I might take a lot of time. That's why I pushed it early. But I will try and maintain the same time. It used to be 12, but I will always be announcing the time you'll be trading. Introduce DOF also. For international markets, it's all platforms. But remember, DOF is not a broker, it's a platform giving you access to international markets. I don't want to expose who they are trading with. There's also IBKR, Interactive Broker. Interactive Broker actually are the ones who have given, all the brokers you see who have offered international markets, even custodians, they got through Interactive Broker. Only that now US Kenyan going to Interactive Broker, it's another hassle to get approval. But fortunately, there are other brokers. I don't want to name them now, but in the next training, and also videos that I'll post, I'll be training you on them. But one of them is Scope Market. There is also, in Scope Market, they have local presence and supported by the international arm of Scope Market. So the orders don't go through a third party, it goes through them. Then they have Deep Prime, which is also when once Scope submits the orders to the market. So then we are trading directly. Then AIB, we are bringing that to you. When is the best time to buy before elections? How many months before? Actually, if you can buy during elections, the better. Because that time prices are down. Between now and election, it's time for you to accumulate it. Election time when prices are way low. Only for sale side, that's only downtime, because then prices go down. But again, it will depend on so many other factors. We are yet to see the effects of elections. But with by elections, you can always tell. I'm a beginner on stock market and a campus student. So right now, I'll focus in NSE. You can focus even international market. International markets, you can buy fractional shares. 0.1 of NVIDIA now times its price. So you can buy even with. For Scope Market, minimum is $10. That's around 1,400 minimum. AIB is, yes, it's offering, but you have minimum amount to start, but you can buy from one share and above. Just check our website, but I'll be going through it in the next training. Link I will still share on the same platforms you have come through. Wednesday, I will share new link, so be on standby. But if you have joined my WhatsApp groups and other groups, I will share. Which are some stocks you should buy when targeting capital gains? If you're targeting capital gains, then you look at the valuation of the company and see if in the future that company can go up. Also check whether that company is undervalued and also check. Now that's where now graphs come in. You go to stock analysis. In stock analysis, you can see NSE stocks. You just search for Safaricom, click on it. When you get Safaricom, click the word Kenya. It lists all the shares. You can click on the share. It gives you the graph. Try to project for maximum. See how the share has been performing. If it is still at the lowest, you can buy for capital gains. And stock analysis has also comparison for the last 52 weeks, 1 year comparison. Check between lowest and the highest, you compare the price. Where is it? Is it at the lowest or at the highest? If it is at the lowest, then capital gains is for you. If it is at the highest, then capital gains is minimum. But remember, capital gains you have to sell. Is this trading dashboard accessible to investors and traders that are members of the IB Access? Yes, whatever I've shown you. If you have an account with the IB, you should be able to access that. If you are not accessing, it means you may have opened account through manual forms. Just go to sign up, use your CDSE number, ID number or passport, and email address that you gave. Select username, get your PIN, log in. Okay, somebody help, I can't hear, can't see maybe there was an issue with your screen on your side. But I'll share the recording. You said the best accumulation window is now. Does it coincide with those speculators targeting year dividends? I don't think there is any other year dividend. The last company closed on 15th, the INM. The next dividends will come in February. That's when companies will announce. What is remaining is payments. Payments have no effect in the markets. For the ones which have not paid, there will be no effect. So speculators are people who come in, they speculate prices will go up, and they go together with speculation in social media. They tell you, Uchumi, go to do Bob for Bob. That time you want all of you to buy. There is no supply, so you're pushing prices up. Remember, supply will keep on releasing few shares, so that price will execute. It will be the opening price for the following day, 10%. You push another 10% up, they push more trades, it keeps on going up. Without trade, prices cannot go up. Gibras, I don't think you have lost a lot because I've shared the recording. For a buy, maybe I need 1,000 shares of Safaricom. Please, may I need 1,000 shares of Safaricom, please, on market price? And there is a split of my shares are 600 executed by close of the day. The remaining will be executed the next day automatically. Or do I need to buy again? It depends. When you place, if you put a day order, it won't be submitted the following day. Market orders, you can't put GTD because once it is submitted, if it is not filled, it is cancelled. That is the downside of market order. Put limit order, give it for some days for the balance. Just go to order status, check whether it has executed. On the app, just go to orders, you see whether it is still there or it is cancelled. If it is still pending, it is valid. Penny stocks, I said, stocks trading below 10 shillings with no fundamentals. They have no strong businesses to support price growth. I can access, I don't want to name them. If I name them, let's do this on Wednesday so that they come with the whole list. But don't share these videos to NSE sites. You know, but there is no harm. You should know all these. I'll come with the list next week. You also run pen stocks for those who want to buy them, but avoid Akina Uchumi. PDF, I will share. I'll convert in PDF, share in those platforms. I always share all of them, including the ones I'm doing recorded. I will upload the PDF notes and share. You are free to use them. I will share on all platforms, including Telegram, Discord. Yeah. In the validity section, which option is the best, safest, and less stressful? Is GTD, good tilt data. Then you put raw prices, because order will keep on being refreshed. Your work is just to come and check, is the market still going down? If it is going up, you can amend. If it's going down, you can still wait. How do unhide hidden bids that are less than your bid? On the app, you can see them. Just click more, it will show you everything. On the portal, unfortunately, because of screen, but I'll try and talk to the developer. I keep hearing USP around. How does USP work? Sorry, you mentioned I came late. USP is which one? In stock market. Because some of these terminologies may not work in NSE. Is it an unquoted shares? If it is unquoted shares, they are the ones which trade on over the counter, OTC. Unquoted securities, I believe it is those. If it is unquoted securities platform, it's for the like family bank. Right now, if you wanted to buy, but you can't buy at NSE. You have to go to NSE's offices. You tell them I want to buy family bank shares. They give you forms you take to family. They sign for you. You get you become a shareholder. Family bank. They are not quoted on the main trading system. They trade off the main platform, the shares that you can see. I hope that's what you're talking about. But with the trainings, next time I will go through it. Orders can be split. If you put 1,000 and maybe you're buying, and the other side there is 1,000 with a split of 3, it is be split in those 3 orders, 600, 400. The only possible issue on your side could be maybe there was 600. So you pick the 600, then the 400 was left. If it is a market order, the 400 may have been cancelled. If it is a limit, it should be still be there. The days you put. I press my share price. Can it? In addition, there is a range at the share price. Please, can I use that to place my price to buy? I think I've shown you how to place the orders using market depth. Wait for the video, just go through it. If you're not able to still understand, reach out. I'll be happy to help you. Unless you place multiple bids at different prices, you can still place at one price for the quantity you want. It will be picked with a different splits. If the order is not fully filled, it will still be killed. It all depends. If the order is fully filled, it is removed from the system. If it is not fully filled and you put a limit, it will still be within for the days you have put. If it is a day order, it will still be there for the trading session. If another order comes at the same price, it will execute until market closes. If it is a day order, then it is expired. Otherwise, it will be refreshed the following day without you requiring to put in again. And I think ABR, it was suspended when we are training. I wish I got to see. I didn't see the charts. I would have, but now you have understood what will happen with Uchumi. The same thing have happened with the EABR. When you are trading, it will be suspended. And remember, for EABR, it's not suspension, it's halting. It will rebound the following day, so it will be trading tomorrow. If it is suspended, it doesn't trade until the suspension is lifted. Is Umeme one of the penny stocks? Yes, it is trading below 10 shillings. Unfortunately, it is headed to the wrong direction. Hopefully, those who own it, you can try. If you bought at high prices, you can try and buy Now you DCA your costs to where it is, but then take caution. If it goes back above the price that you have bought, sell immediately and get out. Lower the cost. I saw somebody who did that, and I'm very happy they did that. But at lower prices, they DCA'd. Now they are just waiting for just a small drop again, DCA, then they get out and forget about money. But first do paperwork. You try to see if you can lower that cost. Once you're ready to get out, get out. Penny stock buying, like buying a heart attack for yourself. Yeah, Jean, that is true. Ask those who are near the transaction. What? Does it imply that even Kengen falls under penny stocks? Kengen, sometimes it goes above 10 below. But the reason why I didn't include Kengen is not a penny stocks. It's only that its price is capped by the government. These are things you should know. Kengen is a stable dividend stock. That's why I said I'm coming with the penny stocks. Kengen, its fundamentals are strong. We said penny stocks trading below 10 shillings with weak fundamentals. Kengen doesn't have weak fundamentals. They are making profits, only that their dividend is about, it's a bit small. I'm affected by Trans-Century. Don't worry, even me, I'm part of it. But for Trans-Century, it's a court case. Once that court case is done, they'll come back. When they start trading, just get out. Deacons, I think was it bought out? Deacons, I think. It was suspended. Yeah, they were suspended because of financial difficulties in 2019 and put under administration. And that is the route Uchumi is headed. That's why Uchumi had to report that profit. It's not that they made profit. They had to cook books, revalue assets, profit, so that they are not suspended. I buy penny stocks using free cash flow with calculated move with long-term view. I mostly check book value per share. So even if they close the next day, I'll be on positive. Penny stocks, I hope you're talking about Kenyari, CIC. Kengen, I think they have, but Kengen is not there. Some of these stocks, let me not talk about them. Maybe those with, if it is insurance companies like the ones which are backed up by a unit of fund management, or companies that have other business that are supporting them, you need to be very careful. Always check what you're buying and make right decisions. Sasini is affected because of tea exports. So at one point they report losses, then at the end of the year, they report bonuses and dividends. So Sasini is a good stock for dividends. KPLC is not a penny stock now, price is above 10. But again, KPLC, initially it was a penny stock. Hopefully they don't go back to that route. Kengen, only that. Kengen, it's because of politics. Kengen is the one selling power to KPLC. If they report profits, KPLC should report profits. Their books should align. Whatever KPLC is reporting, Kengen should be within the same. We have Kenya Pipeline IPO coming in. Government have to make sure this IPO looks profitable. They can't let those government-owned entities ruin that IPO. So these prices will be capped, but after IPO, prices rebound back. Which shares would you recommend for yield and volatility dampening? NSE currently. I will send you to stockanalysis.com. Just check how the prices are performing. For NSE, price movements, it's not guaranteed, but dividends is what is guaranteed, not price movement. Huh? What's your vote on NSE stock itself? There are times they announce dividend, but remember NSE cannot collapse because that means market collapses. NSE relies mostly on commissions that brokers pay them. The data they sell, I've seen people recommending that we do away with the broker. What you are telling NSE, do away with your commissions. So that will affect their profitability. That's why NSE is a good stock for speculation purposes. And also just check their dividend, whether it is historical and how they have been performing over time. But it's also a good stock. Hopefully in the future they start giving good dividends. Book value, that is the value of the company, not shares. Value of the company. If you are to sell like now Kengen, if it was supposed to be sold, it's supposed to be valued at around 43. Not at the share trading price. That is the NSE price. If Kengen was supposed to be sold today, its book value, if you are to sell it, what does selling POC Kengen means? You are selling its assets and everything. You see that balance sheet, you are selling everything. You can sell it around 43. That is its current value. But at NSE, its trading price is way below. So it is undervalued. That's how you know it is undervalued. Share price is below book value. Book value is the current valuation. If you are to sell Kengen today, what price can you sell? If you are to sell their share, if the board and shareholders decide let's sell KPOC to another company, what price can you sell? It's valued at 43.18. But in the market, the trading price is way below its book value, meaning it's undervalued. But that does not mean in future Kengen will go to 43. That is why it's technical analysis is for research, but not for you to buy shares. Kengen have been trading below that price for the longest. So I hope now I've explained book value, but today's session was supposed to cover that because I was basing on the last session when we did valuations of the company. But now going forward, I think I should be coming back to these. The list of dividend stocks, let me share here. Dividend stocks. And I'm about to finish, so let me share that link. It's a spreadsheet which you can save on your side. Let me just see if I can copy that link. It's not copying. It's the link with the shares and when they declare dividends. Months they usually declare dividend and the type of dividend they are declaring. So if you are buying dividend stocks, you can use that to schedule your purchases. There is the company. Interim is when they announce half-year results and the companies that give the dividends, which month. Final, when they announce final audited results. Special is when the company makes extraordinary profits. You can see there are people who have opened. So like August, September, they gave a dividend. Final one, they give March, April. If you look at KCB, August, September, that's when they declared interim. They will also be giving another one March, April. You see all of them, maybe January, February, we have Centum. And the rest, the ones in red, those ones just ignore. Umeme, we don't expect any other dividend. Britam, they give their last dividend in 2020. So all the companies are there. And I'll be adding more as they come. Those are the tentative dates they give dividends. So if you are buying, buy early. Like now, the prices are down. So the reason why I usually give this list Just take on the month, the company that you want. Which month do they give? Is it next year? Now, between now and next year, when prices go down, try to do DCA as much as you can. Buy low prices, accumulate. You wait for that time. When they announce, don't sell in book Russia. Since you bought at a lower price, don't even sell these shares. Hold forever. So that spreadsheet, you can make a copy. Just go to File, make copy. Or you can just download as Excel, PDF, whichever format you feel. These resources are free. They are available for you for free. If you make a copy, it saves on your Gmail. You can use that now forever. If you download as Excel. You can even share the same worksheet with others. It's all free. It's how you want it. I've made it free for everyone. And I've said company, interim is when they announce. If you go to price list for NSE that month, you see they have announced dividend. If you go to the broker, I think on our side, we usually give you recommendation. You see that time you have. But now the reason why this spreadsheet I share you early, it is for you to position early enough before prices go up. Remember what I said, between now and February, prices will go up. Why? Look at that spreadsheet. Most of the companies will be announcing March. So between February and March, institutional and foreigners want to get early in. So that's time prices go up. People who sold now to pay school fees, that's the time they are returning to the market. And notice most of the companies, that's when they declare dividend. Meaning what? Most of those stocks prices will go up. NSE 20 share index will go up, meaning market will go. I hope now it is clear. Now, when you start interacting with some of these things, you now understand when market will go up. February, March, April, prices will go up. Again, April, May, there are those companies. July, August, still only around December where there are no announcements, and that's when the market goes down. So I hope that will help you. Did I clear charts? I think something may have happened. We have so many questions remaining. Umeme, it's a penny stock straight. You should think about how to move out. How can I get a broker? For NSE shares, you can come to AIB Access. Just download AIB DigiTrader from Play Store. AIB DigiTrader. Open account from there. You don't need to come physically. We'll open account for you. You submit your application, we open. You get your CDSE number, you start trading. Everything you do on your own. When you open CDSE, if you have not received your CDSE number, reach out to my WhatsApp number. I'll help you get your CDSE account. Hopefully the same day you reach out. From there on, you don't need even to talk to the broker. Funding is automated. Trading is automated. Withdrawal is automated. Dividends, they come to you. Do you have link? International market, it's the same group. On Discord channel, that's where I put groups. But for the other WhatsApp channel, WhatsApp group, I share everything for all the products on that channel in group. I don't have separate so that all of us we are together. It's only on Discord channel where they are separate. And they are not separate because once you join Discord channel, they are group, they are categories. Actually, they are not separate, it's categories. On the rest, because there is no way to categorize, I post everything on just one account. Only on this channel, there are categories, but it is one channel. For international markets, Scoop Markets offers CFDs not according to. Yeah, Joseph. Ignore ChatGPT. Ignore ChatGPT. We use ChatGPT for formatting content. Me, I use it for formatting content, not for research. If I have to use AI, only if I want to format my content, not for research. And I would want to challenge you. The same ChatGPT as we talk. The boy asked it, AIB Access broker code. Just type on ChatGPT. AIB Access broker code. If it doesn't give you bit of, just forget about ChatGPT. Broker code for AIB is B12. If it doesn't give you that, just move out of ChatGPT. Why? ChatGPT just puts everything on internet, checks which looks like it's correct, then gives you that. Scope markets, they offer both CFD, international markets, physical shares, fractional shares, and also access to metal and other products, including Forex. It all depends on the account you open. Huh? There is an all-share account. There is a scope something. I'll be training you next. I hope this Friday. Oh, this Friday there is an event. I can try and see if I can do it with KEG. You see the type of accounts. There is one that supports fractional share. The reason why I'm saying this, we have a partnership with them. So I know what they offer. They offer physical shares, fractional shares. All Forex trading brokers, they have CFD. All the brokers you see here, they trade on CFDs. Why? They buy shares themselves, then they give you a CFD stock of it to speculate on movement. So they are making money out of it. I didn't want to say this because that's what it is in the market. They make money out of it. They have bought shares, you are trading on that CFD. Then later they can sell that share at a profit. How do you find book value per share? Mostly it is there on either you can find it on company financials. Also, you can find it on our research reports, but it's something you can calculate easily. Let me show you next week how you can do it. Market value is the value of the shares in the market. Book value is the value of the company. Notice the difference. Book value, value of the company as it is. Market value is the value of the shares in the market. I bought APSA on Monday to 30 quantity. At that, it has been on wait GTD. Do I wait? Just check its price. If the price is still going up, you can adjust upward a bit. But you can still wait. If prices, you just check on the supply side. If supply is still more than demand and prices within, just wait. If prices are going up, you can adjust upward. I can't sell or chart. What could be the problem? It could be supply. Maybe there is no supply. I hope that is the share or chart. This is orchard, most likely it is the price, because I don't think there is any, but the counter is not OCH. It is changed to AMACE. Africa Mega Agriculture. I hope I'm correct, because they changed their name. Just check whether there is AMAC. It should be there on your portfolio. If you have it, that's the correct share. That's the one you should sell, not OCH. Just check on the portfolio valuation, AMACH. What happened to the NCBA Standard Bank deal? That was a rumor, and I think you saw why the rumor was there. Somebody came back to NCBA board. It would have had a negative effect on the market. So that rumor had to be created. They get into the board, rumor goes down, but there are people who made gains. Simon, I hope I've answered you. There was a rumor somebody came back to the board of NCBA. I don't want to name the name here. And you know who owns the NCBA. Why would they sell the bank? That is, family cannot sell that bank. It's the one supports M-Pesa. NCBA supports M-Pesa. All transactions you do via M-Pesa, they go through NCBA. If an agent rules M-Pesa fruit, it is done through NCBA. Even if you go to Equity or Family Bank to roll your fruit, it has to go through NCBA. So why would they say? So that deal was just a rumor, but it was good for the market for those who bought for. Hopefully, when investors get to know these, they won't panic and start selling, because that's not a fundamental that can stand for a long term. But hopefully in future, NSE and CMA, they clarified it's just rumor. The bank themselves, they said it is a rumor. If a bank is disowning, they can't disown because they know what they did. And most of these, they are fed to influencers on social media. They share. This was done through Bloomberg. Bloomberg just shared. Other social media influencers, they just shared, and it became like it is news. Voice is not clear. I hope I was clear. Maybe it is a gadget on your side or internet. If I think of international trading, is it possible to get dividends in Kenya? Yes, for international markets, dividends are loaded in your trading account. You can withdraw when you're withdrawing funds. They are not paid directly to you. They credit to your trading account, then you just log in and withdraw. It's the same thing when you're going through AIB. It's credited to your trading account, then you request to withdraw. Do you also teach Forex? Yes, but I just wanted to first start with the NSE, international markets, boards. Then we move to the other platforms. Forex, the CFDs, government boards and corporate boards have started because already boards are already trading. Forex is because it's a bit technical, and unless you understand NSE the same way you have understood market depth, Forex you not understand. If you understand now graphs for NSE, market depth for NSE, Forex will be simple for you. Bots trading, that I usually do. I did one for EABR, the time they announced, Safaricom board, but now I want to do it regularly. Maybe weekends or one day. I'll try and fix how I'll be training all these trainings. So do you mean Umeme doesn't offer dividends? They only offered once, and it caused that amount they were paid by government of Uganda's compensation. They decided because it is a profit, let's give it to our shareholder. They are chasing the remaining amount, which they said they don't know when it will be paid. Unless for Umeme you want to wait for that time. There is no other dividend and price may not move. So for those who have made huge losses, what you can do, just close your eyes and say, yes, let me wait for the longest, but I'll not sell at a loss. When they close that case, they give a dividend and receive another dividend. And maybe that time, most people would want to lock in a dividend, so prices will go up. That time I can hit them and get out. But immediately that happens, exit and go far away from away from. I think you should consider doing regular refresh stocks, buying and selling so as to empower. I usually do this even on those platforms that I hope personally own. Telegram groups, WhatsApp, I do that. And every training you have seen, like today, I had to do a refresher for shares so that you understand. Next time, still a refresher and also a refresher for dividend. It will be happening every week. And I usually post trainings every now and then on those groups. And also do recorded sessions. Does AIB offer fund management to investors who don't have time to analyze financials? That is not fund management. It is usually wealth management. Yes, we have our wealth managers whom you can be talking to, but they need an order from you. So they usually do that. It's based on personal engagement. They don't charge. They are paid by AIB. But you need to be a regular trading client. But that has a downside. Remember, it's somebody making decision on your behalf. Is it advisable to buy EABR now? Today it is suspended. Let me just do analysis based on what was announced. Then tomorrow I post. Or if today I have time, yeah, I still have time when I go home. I'll analyze the effect because I don't have full details. We want to create a CDSC account as a group. Is that possible? Yes. If it is for a group, make sure it is registered. Go to our website and downloads AIBAccessAfrica.com. Under downloads, there is a corporate form. You download both AIB and CDSC form. Make sure you attach all the requirements that are needed. If it is a chama, if it is registered, use the registration certificate. If it's not registered, though I don't advise that, you use treasurer and chairman or chairperson to open. They use their details. But what happens when there is disagreement? We don't want court cases. That's why we always advise let it be a formally registered group. If it is not, then chairman and chairperson, and make sure you abide by. We need minutes authorizing that, and if possible, constitution declaring what should happen in case of disagreements. A company, you know, it is a company. When we sell, we pay that company. You can't withdraw until the bank allows you. If it is individual, you're paying two individuals, they can decide rates. Share these people. So for groups, make sure it is registered. And if you need training, I'm happy to do it for free. Just tell me date and time. Our offices are always available, or if you have somewhere I can meet you, I'm always free on weekends. Opening a CDS account, just go to AIB Digit Trader or on our online trading portal. Go to open your trading account. So for the first on the app, skip the first screen, go to the next one, open your trading account, submit your details, send your ID number to my WhatsApp number, or you can call my number or call the office. It will be processed. But now we have reduced on backroads. I think it's only accounts which are existing with another broker which are giving us a bit of headache. But for new accounts, we are up to date. I prefer using limit market. You might lose some opportunities in the market at that time if you create GTD. Yeah, I also use limits. Market only if you are not sure about the price, or you want to clear everything on the supply side. Maybe you want to clear two levels. I will always advise, because you can see price, use limited. But even if you're putting the price on the supply side, it will go. Oh, Olympia Capital, not Orchard. Olympia, I think it should be still trading. NSE should be trading if I'm not wrong. Yeah, it is trading unless there is no supply or demand. It is trading. Should be trading unless there is no supply or demand. You know, some of these shares, not many people know them. You know, people buy based on how they know shares. How come HFCK doesn't offer dividend? Housing Finance doesn't. Yes, it is in the banking sector, but it doesn't give dividend. But they don't. Most of their dividend they go to the housing projects. They invest those profits, or they pay those people who have bought the houses. Remember, there are people who buy houses through schemes, and they are paid. I think they are paid on. There are those who are paid some interest. They also have their own projects they are doing, so they reinvest those profits. But hopefully in the future they might start giving. And again, they are not on tier 1. I think I'm not sure whether they are on tier 2 or tier 3. You guys open me a derivatives account, but I can't get support on how to activate or to continue trading. As I was told, you discontinued. Yeah, we stopped offering derivatives. There is a broker. There are brokers who are offering derivatives. You can check on NSE website who is doing derivatives. But if it is payment, reach out to our finance team. Or link for WhatsApp group. Let me share again. I think I thought you could see it. Let me just reshare again. Sorry for that. Let me just get that. If you have to comment on that group, it works on WhatsApp for web or WhatsApp on your laptop. The app, it won't allow you to comment or reply to the comment to my postings because I've surpassed the number that is required. That's why I created Discord channel. But just join. I will share the links there. Let me see if there are other questions. Can you assist me activate my dormant account? Yes, Ian, just send me a WhatsApp number, WhatsApp message with the ID number or CDSE number. I'll check what you need to do. If account is fully KYC compliant, I'll just activate. If it is not, I'll send you documentation. Then once you set the documentation, you should be able to activate. What if we use the signatories? Yes, signatories, chairman, secretary, it all depends with chairman. Whom do you want to appoint? Yes, the person to open the account. But make sure you have, is that constitution or minute that defines what will happen if that chairman have a problem or group. You don't want your money to be locked in or people to sell those shares without your authority. What about opening a CDS account for couples or for children? On our website, again, just go for these account opening forms for couples. It should be, I think, the second one. And there's also another one for minors. Just fill in. You can always set to answer. We'll open for the child. It's joined with you, so we are using your details. But make sure you attach birth certificate. I'm growing every day. Thank you. Thank you very much. Share contact for the finance as the account has money for but dormant 0711 047 120. Repeat the website. Let me share the link here. Even for those who don't know AIB access, you can just go to that website. Let me share the share, not save, it's copy, then paste. Sorry. Paste. That is the website. Just go to downloads. The individual equities account opening form. That is for spouse. First of all, individual, if you're opening as an individual, but for individual, just go to the platform. It's much easier. Because for individual, it is done the same way. Joint is either as a spouse or with your relative, parents, with a teenage, children who are over 18. Then we have minor accounts for the juniors. Then company or registered chama, registered groups. Those are the forms. Then there is if you're opening international stocks trading account, you want to buy shares outside the country, there is W8BN form, which you fill together with the other forms. I'm looking forward to invite you to our group. That's good. And I think, let me see the time. It's already 4. Thank you so much for holding, I think, from 11 to now. And I hope you have learned a lot. If you have any other question, you can reach out on Discord. I would be happy to answer. You can reach out on my WhatsApp. If you have access to computer or WhatsApp for web on your browser, you can just comment on any post. I'll be happy to assist you. Thank you so much. I'm learning and growing every day. You make us feel like we have been in this market for a decade. I'm always happy for that. And I'm happy when you gain, not when you lose. Don't buy stocks that you lose. Make money, make money. Thank you so much. Let's meet the next one. And all these trainings, I said, they are always free. Utilize them very well and make time for them. Ask questions. You never know what will happen tomorrow. Another Peter may come and tell you I will charge. You see now, take that time. But for me, I don't purpose to ever charge, even in personal capacity. Thank you so much. Let's meet next time. I will share this recording later. If you can come back to the same chat by tomorrow, let me hope by tomorrow midday I should have shared. I'll only hide my details so that when you're funding, you don't use my CDSC, because you fund to my account instead of your account. Link for soft copy, join that WhatsApp group. I'll share, but I can share, let me share my blog, because that's where I upload them. Let me share that. That's where I will post the link to the notes and also other videos. You can explore it. I'll share the notes there. Thank you. Let's meet next time.